Hey, Don, good to have you.
Yeah, somebody told me I could use my computer for spaces, but I wasn't getting the invite request on the computer. I had to use my phone.
I almost sent Musk a tweet the other day asking why we can't do that yet. It doesn't make sense to me why we can't use our PCs for spaces yet. I would much rather do that. I have a better microphone. I've got a nice headset. I can stay unmuted and have a more dynamic flowing conversation. I just don't understand why we haven't got there yet.
I
Anyway.
I agree with everything you just said.
Well, welcome in. It's really good to talk to you again. I've been looking forward to this all week. Our interviews tend to be pretty timely with the markets, and big things tend to happen. And so, with big things already happening, I'm very excited for this. So, thank you for coming in again. I think this is number 6 for us.
Wow,
So,
really that many? That's great.
yeah.
Doesn't feel like it's been that many, but yeah, the timing is really good. Absolutely.
Well, I got a lot of questions about that, and we're ready to go. But for anyone tuning in with us live, thanks for coming in. We're happy to have you. Feel free to raise your hand and request to speak if you want to talk to Don directly, if you have questions. He's a straight shooter. Most of the time, he hits it straight right back. You can talk the macro, we can talk the gold and silver, we can talk stock picks. It's all going to roll. We'll start with the bigger macro picture, but at any point, feel free to chime in. If you're listening to the recording, I hope it gets you on your drive home from work or on the way to work or doing some yard work or something. But stay tuned and listen to it all because there's a lot of nuance that tends to happen throughout these things, and a lot of things get said. And if anybody wants to come back and catch up, if you drop out, we'll timestamp this thing and upload it back to YouTube. But I encourage everyone to really listen to the whole thing because there tends to be real big chunks of meat all throughout in sections. So don't miss it. Stay tuned. Listen through it all. You're going to learn a lot. It's going to be good. Don's the guy to listen to. He's been in the precious metals sector for a little over 20 years.
Yeah.
And successful investor. He runs the newsletter goldstackdata.com. I've been a subscriber myself. It's good stuff over there. He breaks down all the picks. He breaks down what they're worth, what they've got in the ground, what he expects from them in the future, their debt, their total profiles. He sends you weekly updates, monthly updates, big picture stuff. It's good to see. Don's an author. In particular, he's got a book in the precious metal space that no one else has anything like it. And that's what's that title of your book there, Don? How to
Yeah,
invest in.
how to invest in gold and silver with a focus on mining stocks.
There we go. That's the one. And contributor to Seeking Alpha, among many other things. I mean, he's the guy to listen to, and we always appreciate your time. So thanks for coming in, Don.
Yeah, it's always fun to do this.
So something that intrigued me that I want to start with right off the bat is you had a post a couple of days ago on Twitter. It was in response to another gentleman. And you said, I have never called for a stock market crash since I started my newsletter in 2012. I did on September 1st. I said that in September, the S&P would test 4,200, and we got close. And then in October, it would crash. And this call was based on history and the macro setup along with seasonality. So things seem to be going along the way you foresaw it. What do you see right now in this big picture macro setup of what we've got going on? Do you still anticipate this crash in October? What are some catalysts you see? And what should we be afraid of?
Well, I thought the odds kind of implied that because I just have felt that this whole run in the stock market going back to the lows of last year in October, just felt to me that it was a dead cat bounce. That I mean, I just look at this historically. I just look at it, holistically. I go all the way back to World War II forward. The reason why I got into gold and silver mining stocks in the first place is that I just feel that the U.S. the economy is basically kind of turned in the 70s and has been turning since. Yeah, we have definitely technologically we've been a leader globally, of course, absolutely, but the background has been the middle class being hollowed out and the U.S. living off of debt to generate growth, economic growth. So our growth has basically been false or fake since 2000. And, we got through the 90s because of the technological advances with the internet. But without that, we'd had a big problem. Once, we shifted from a mercantilist economy, basically in 1971, 72. Since that time, we've been basically faking it. And it just felt to me that now we're coming forward, since October of last year when we had this run, I just felt that it was, it was basically built on fairy dust. It wasn't a real economic recovery. And so we got to August, and I just felt like, we're hitting the end here. And you go into seasonality, you go into September and October, and I just felt that, that run, that 9-month run was getting ready. It was just long in the tooth, was getting ready to fall. And I just feel that's where we're at today. We were really, today we could have went under 4,200. But the stock market, basically I felt like they got a reprieve here. We got above 4,300 on the S&P. And the reason why is because Wall Street refuses to believe that we're going to have a recession, which to me is, I just think that they're just talking their book. I think a recession is inevitable here, and it's coming. And once it comes, I just feel like history is not on our side here. Once this recession starts, I just think bad things are going to happen. And I'm not sure we're going to crash in October. I still think that the odds kind of favor it. Can the markets kick the can a little bit further down the road? But I did a poll today. I haven't checked to see, what the results are. I just started. The poll was, what's next? 4,800, which would be an all-time high on the S&P, or 4,000, which would be a breakdown. Because if you go below 4,000, I think we'll go all the way to 3,500. So it's basically, do we break down or do we break out? Now my readers are mainly bears, so the 4,000 is going to win, but I want to see how close it is. Is it going to be 70-30 for a breakdown? Is that the tone? And if that's the tone, then people are thinking we're headed for a crash. So do we get through? Let's see what happens in October. But it's fascinating. It's a fascinating conversation. I mean, what are the miners going to do? What's the U.S. going to do? I've been writing about this stuff since 1990. Where America's going. It's just starting to unfold.
Yeah, it's interesting to me because I'm a technicals guy and I like to read the charts and I like to make calls accordingly. And what I see in the charts is I actually see another bounce coming. I see the bounce coming in metals. I see the bounce coming in the stock market. I even see stuff like Nvidia, which is already so high. I see it getting another high possibly before what I expect to be a larger sell down. I would expect to see Nvidia around 340 or lower by the end of the year. I'm pretty confident in that. I think that's in the charts and you can see it. The uranium sector, for example, just had a big run and it sold off and had a big correction, 20%. It would not surprise me at all to see it go retest those recent levels or break through them before it has an even bigger crash. I really see this in the charts. And why that's important I think because you can kind of see what I enjoy finding in the charts, which is confluence. You see everything talking to each other. Everything's kind of in harmony, setting up the same way. And where you get these big events and you can kind of feel and smell like the larger players who kind of know what's coming or even positioning for it. And I see that. And we could talk about the price action recently here. It's a good segue in gold and silver. Obviously, we just had this big rundown and then a nice bounce today, especially in silver. And I kind of see the same thing personally, in my opinion. I see a nice little bounce here, an oversold bounce before some catalyst. And like I said, this harmony in the charts that you're kind of seeing, I don't know what it is or when it could be, but certainly in the near term, I think by the end of the year. And we're going to sell again. And I'm just curious your opinion as it relates to the price of gold and silver and the price action lately, if that surprised you, if you're worried, how the levels have rebounded so far, and kind of what's your take on it.
Well, I want to talk a little bit about this bounce that you see coming. Now, what happens if we go below 4,200? Does your bounce die?
Well, see, I think that we're already in the process of bouncing. Right. And I think that this could last for a couple of weeks, maybe a month. I'm not sure. But I think we're at the start of a bounce that's going to really sucker a lot of folks, I feel. And I think you're gonna wash some hands here. I think that this bounce is going to be short-lived before it takes another leg lower. And I'm not a really big. I'm not much of a fan of charts in the shorter time frame. But if you look at the daily chart or even a 4-hour chart, and you really zoom out and you look every time we've tested these significant lows and levels of being oversold and the RSI and divergence and all that kind of stuff, very rarely, very rarely, and as far as you go back, have we been this oversold and that been the bottom? Typically, what happens, and it's pretty consistent, is you'll come down to a very oversold level like this and you'll bounce before selling off one more time. And what tends to happen is you'll start to put in divergences and reversal signs at a lower price later. And I see that same thing playing out here. Now, I could be wrong, right? I'm just a guy with an opinion, but when I read the charts, that's what I see. And it tells me when I see the price action in the market broadly, and I kind of see the action today, I just feel like that's what we're setting up for. Certainly in the metals, I just feel like this bounce we got in silver and whatnot. I don't think that this is the low. I think we have another leg down. How far it goes down, I don't know. I think we test 1920 for sure, but it's going to be quick, and that's where I'm looking to get in. When you look at the equities, a lot of them are starting to hit support. Right, a lot of these gold and silver miners are hitting buy targets, but some of them are a little lazy. Some of them still have a little catching down to do, and I think we get some false breakdowns. I think that we really shake people one last time. Sentiment's already terrible. Usually, that's a good indicator to get in. I think that it's going to get worse. I think that we can go lower, and it's not because I'm not bullish. I just think that we're about to get okey doked. And I can just really feel that coming. Certainly what I see personally in the charts.
I definitely agree that golds are going lower and silver's going lower. I expect gold to get a 1700 handle here. But let's go back. I want to still talk a little bit about this bounce. So we broke out in June above 4,000, above 4,200. So when we got above 4,200 in June, that breakout. The one thing I like about charts, what I think where I think TA really shines, is that it shows follow through. So I always look for places where when you get a breakout, you get follow through, and then you see how far that follow through goes. So once we got above 4,200, you had basically a breakout candle above 4,200. Looks like it was actually late May, and then early June we took off. Yeah, it was actually late May when we got above 4,200. And then the follow through went all the way to 4,600, 4,606, and it stopped. That was the end of your follow through. And then from there in August, then you basically started falling in August. So the correction actually began in August and continued into September. So now this little bounce. So we went down. We didn't get to 4,200. We got really, really close. We had some intraday candlesticks. It got really close to 4,200, got close to the 200 moving average. Didn't touch it, but got really close. And I really think that was a sign that we're coming back here. So yeah, so you went to 4,200 late May, and then you went all the way up to 4,606, and that basically didn't go through there. Now we made a fairly quick downward movement from 4,600 all the way to 4,200 at 4,000. So yeah, I think it looks like it needed a little bit of a breather, what you're calling this bounce, before it basically breaks down through the 4,200. So I'm thinking that we're probably, one second here. Not sure why I'm getting something on my screen. Boom, 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 boom. That's strange. I got to go back to what I'm talking about here. So 4,246. So when we go back down, I don't think the bounce is going to go back to 4,600. No, maybe we go to 44, 4,500, somewhere in there. That's a possibility here. That's the bounce you're looking for. And so next week's going to be a real tell. Does it fall back down and make another run at 4,200, or does it have some legs here and get to, somewhere the 43, 44, 4,500 before it rolls over? But I think these higher rates are definitely going to bite. I don't see the consumer getting stronger. I don't see the economy getting stronger. I definitely feel like the economy is weakening because of the high rates and because the Fed really doesn't care if the economy, falters here. The Fed's not coming to the rescue. The Fed's not going to cut rates unless there's something bad happens. Let's just put it that way. They're not coming to the rescue of the market. So I think if the Fed doesn't care, something's going to break. So maybe we bounce. So just to finish this conversation, if we do bounce, yeah, could see us bouncing to 44, 4,500. Definitely could happen. But that's about as high as I see it bouncing. And I think that's what I'm hearing in your voice.
Yep, that's about right. Yeah, I would agree with that. And to follow up on that, let me give you more of a tricky one. Considering today, after recent price action and what we see, October 6th, do you think to the average retail guy looking at gold and silver stocks thinking, man, these are pretty oversold, these are pretty cheap, do you think that there's more risk in time right now, which just suggests that we might go lower, or in the company you pick? Is it more? Where's the more risk at right now?
Yeah. So this question has a lot of different angles, if you will. How you invest. Are you a trader? Are you a hodler? Your strategies. Everybody's approaches it a little bit differently. Now, for me, I'm a hodler and I'm not a trader. If I was a hodler, I'm a trader, I'd be in a lot of cash right now, waiting for cheaper prices. Just if I was a trader, if that's my focus. But being a hodler, I want to look for opportunities, to look for stocks that are on sale. And once I get a feel that these companies are close to bottoms, I want to buy them and then basically buy them to the bottom. So I'm looking for, what are the stocks that I think, kind of have the most juice, the most risk reward. And I'm looking at my portfolio and making sure that, that I have an opportunity to add shares to those stocks. I'm going to add shares. I just want to make sure that I'm positioned right. So I'm looking at my portfolio. I'm looking for stocks I own, stocks that are down more than 50%. If they're down less than 50%, I'm not going to add to them. But if it's down more than 50, because 50% to me, I can be back to even really quick in this type of a market. And so if it's down more than 50 and I like the stock, then I probably want to add to it. So I'm looking at those names. And then I'm also looking for companies that I don't own that are cheap, so I have a list. So I've been doing this for months now. It's not like I'm doing this now, but now's the time. Basically been buying these stocks. Once the HUI got below 225, I went into buy mode. For me, I'm in buy mode below 225 in the HUI, and then between 225 and 250, I'm kind of in look for opportunity mode, and then above 250, I'm in watch mode. I'm not really buying above 250. And then once you get down, to 200, where we're at now, where the HUI is at 205, I'm basically in buy mode. So, I've added to some Avino this week at 45 cents. My cost basis is now down to 71 cents, which I'm very comfortable with. I don't think Avino is going to go much below 40 cents. I just don't. So I'm adding to that. But now I'm pretty much done. I'm comfortable with my position. But if it goes to 30 cents, I'll add a little more just because I like it. Hummingbird I looked at today, it's down. The market cap's down to $50 million. It's just gotten so silly cheap. But they don't support the North American market, and I think that's the reason why it's getting beat up. I mean, they think they only need to support London, which is ridiculous in my opinion. I've been sending them emails recently, telling them, "Come on, guys, you got to support North America." But they're going to be a 200,000 ounce producer with an ASIC probably around 1,400 next year, and they're trading at $50 million. It's just silly cheap. So I'm looking for those type of stocks. Another one I'm looking at really closely is Coeur d'Alene. I mean, they got down to, somebody bought today at 205, I think they told me, 209 maybe. But Coors printing is a 20 bagger. It's $100 silver, but still, I mean, even at $50 silver, it's, 5+ bagger. That $50 silver to me, is less than a year, could be less than a year away. So, I have to add to Coor because stocks that get quality. When a quality name gets that cheap, for me, I just want to add a little bit more. Those are you have to buy these dips to kind of protect, if you're a hodler like me, to protect your portfolio, so that you're going to, and these type of big dips, you're going to get a lot of share dilution, where companies basically, they always need to raise money, and they're raising money when their share price is low. So that brutalizes your holding, as any hodler knows. So, yeah, so you're constantly trying to, add shares, buy new companies, buy dips. But this, to me, is such a buying opportunity. I sent out a couple emails this week saying this is not the time to be watching. This is the time to be aggressive. You want to find stock, buy stocks on sale. There's so many 10 baggers out there. I mean, yeah, maybe you don't buy the bottom, but so what? As long as you get close, as long as you get a really good entry price. I mean, I was at Beaver Creek a couple of weeks ago, and I was talking to some of these companies. I mean, it was just they're just silly cheap. I mean, maybe you get them a little cheaper than you get them now, but they're already cheap. So you got to look at those names. I've been really nice. I mean, I've tweeted out a lot of lists that I gave away free. I gave away free my notes to Beaver Creek, showing people these companies that are really, really cheap. The best ones that I like there. So and people can watch them. Now you can buy some of these stocks maybe cheaper. Like Hekla's like $3.50. I don't see Hekla going to $3. So if you're buying at $3.50, you're pretty much buying close to the bottom here. It's probably going to be a 10 bagger. It's probably going to go to $35. This is how cheap these stocks are right now. Newmont is trading as a 4.5 bagger at $3,000 gold at an 18 multiple, almost a 5 bagger. So Newmont. So Barrick is trading at a 4 bagger at an 18 multiple. These companies, I believe, are going to be trading at 30 multiples when we get to $3,000 gold, because they're going to have higher margins. Now, I could be wrong. A lot of it's going to have to do with inflation, with their costs. But if their margins, if their costs are below $2,000 and their margins are $1,000 an ounce, these companies are going to have a boatload of free cash flow, and their multiples should be in the 30 range. So I'm valuing them at an 18 multiple at 4 and 4.5 baggers. That's Barrick and Newmont. What do you think the mid tiers are going to do? And you're not buying now, and you're not looking at these stocks. You're making a big mistake.
Well, appreciate the insights. Yeah, Hekla. The last time I bought Hekla was during our last September interview, where we had called that September low there, and that panned out quite well. Hekla went on to go up 97%, about 3/4 of a year or so. It was about 36 weeks or something like that. Had a very nice run, and is right back just about the same place as you had alluded to. I personally can't help my conviction, though, and I stand by it, that I think we still have a retest, maybe 10% lower here. I think we get some false breakdowns, and I personally have some bids in for AG, for example, First Majestic. I think we hit 450. I've got my bid in at 460 because I'm not sure if we actually get down that low, but I'm looking for that, and I've got my fingers crossed on it. It was very, very hard. It was extremely difficult not to make that purchase sub $5 already. I mean, First Majestic at 5 or less is just, I can't believe that the day came. And it's like ever since that Jarrett Canyon news came out, it's just been going down ever since, more so than its peers. I mean, it's really been tanking. How do you evaluate a company like First Majestic right now? Any loss of faith in Keith Neumeyer? How do you feel?
I really never have said anything negative about First Majestic, because I'm a fan of Keith and I'm a fan of First Majestic, because I just think, that they know how to build and operate mines. Yeah, they made a big mistake with Jarrett Canyon. I didn't like the acquisition from day one. I don't know why they made it. It never made sense to me. And just stick with silver. I mean, that's your niche. What are you doing moving over to gold? especially overpaying for. I mean, everybody realized that they kind of overpaid for it. I think they paid like over $400 million for like 150,000 ounce mine. I mean, I felt they overpaid, and they made this argument, but it has the mill is worth what they paid for it. Well, if the mill is worth what they paid for, they should resell the thing right now. Get rid of it. But I think you're right. I think First Majestic is a 10-bagger here. I think it's all these silver stocks are cheap. I think now it all depends if silver breaks out, but I think it will. But if silver goes to $50, First Majestic, Hecla, Coeur, Silvercrest, Pan American. Pan American is basically a gold mining company, but they're still going to benefit. These stocks are all going to fly. There's just no way they're not going to participate in that run because their margins are going to blow out. And if their margins blow out, their multiple is going to go up. It's pretty much that simple. If you look at the free cash flow that any silver miner that's mining over 3 million ounces, it's significant because their margins are going to really blow out. Their costs aren't going to blow out. Not because what's going to happen is silver prices are going to run much, much faster than their cost. Silver's once gold gets above $2,100, and I think this should happen. Could happen this year, but it should happen, I think, in Q1 of next year at the worst case. Once you get above $2,100, I think silver just comes running, just like a rocket to $30. And once it gets above $30, I think within 6 months it's at 50. So cost on, and if we're looking like less than 12 months from now at $50 silver, there's no way that costs are going to go up that high. Costs will go up, who knows, maybe let's say 15%. And the price of silver's going to go up 100%. Their margins are just going to blow out. And so that's why I love the silver miners, and I'm adding to them. I'm looking for opportunities. It's like, for me, I just think it's the place to go. I think that silver will outperform gold by 4x to 5x. That's the leverage that you're getting. For instance, I see silver going, from 22 to 100, which is like 450%, and gold is not even going to double. Gold's going to go up like 65%, and silver's going to go up 400%. So do the math on that. It's like it's a 5x difference. So silver is going to outperform gold by 5x, and you're not in silver miners. It doesn't make any sense.
This is a good segue, and we'll come back to individual companies and breaking them down. Let's move into the catalyst for the price of gold and silver to make a substantial, meaningful move higher and start breaking key technical levels and really have a true breakout. First, I'll preface by saying that when you look at the ratios in the charts, gold to anything, whether it's the SPX or whatever you want, same thing with GDX, et cetera. We're incidentally, in Confluence, we're coming to the apex of a lot of these charts. These have been building, a lot of them, for decades, and we're coming to the end now, finally. And, last year in September, I thought that would be the low to get the breakout. Obviously, we didn't get it. But a year later, we're even closer to the end of this thing, and the macro has completely changed. Most things have gotten worse. We're printing money left and right, hundreds of billions of dollars a day. So what's the catalyst here that we're looking for now? When does that fear trade come up? What are you looking for the next big catalyst?
Yeah, well, I've been looking for it for 18 months, and it's basically Wall Street giving up on this idea that we're not going to have a recession. So, I mean, if you go back a year from now in October when the markets started moving higher, Wall Street was like, we're not having a recession. Let's buy stocks. And that mentality is still in play. Today on the halftime show, I tape it and then I watch it when I stretch in the morning. And I mean, I couldn't believe it. These guys are having a party. I'm like, it's one day, guys. It's like, it's not as if, you won. It's not as if this is a guaranteed outcome that you don't have a recession. They're having a party today. We're not having a recession. The market held 4,200. woo woo, we're not having a recession. That very, very. I think that, they're a little ahead of the game here. But let's yeah. So let's go and look at some of the drivers here. What's going to push gold higher, right? And it's going to be this change in sentiment on Wall Street. You go back to 2008, 2007. That type of fear is not. We do not have that right now. That's the fear that's going to come back. That's the fear trade. We didn't really have the fear trade in 2020. It really kind of surprised me that gold and silver made that kind of run in 2020. That really surprised me because I wasn't really feeling the fear trade that much, because it seemed like the Fed kind of still had a little bit of juice to kind of prevent a meltdown, if you will. And they I wasn't feeling the fear in 2020, even though gold ran. But the fear trade that we had in 2007 and 8, I feel that that's coming back soon. And the reason why it's going to come back is because I feel that this next recession, once it begins, is going to be much worse than 2008-9, because 2008-9, the Fed basically had tools to deal with that recession. They could lower rates to zero, which they did, and they can print money. They could bail out. They could do whatever they wanted. They could be proactive. This time, they're not going to have the tools to do that. They're not going to be able to do what they want to do. And people are going to recognize that. And that's going to create more fear. And so once you start having bankruptcies in this country and they can't bail corporations out, the fear trade it's actually going to increase. That's how gold's going to go from 2,000 to 3,000. That's how the fear trade is going to push gold higher. And I'm very confident that this is the outcome we're going to get. Once this recession begins, so I've been doing this for a long time. And I've been reading some of these other guys. They're basically saying, I've never seen it this bad, because they've seen the same thing that I'm seeing, is that the fundamentals for the U.S. economy are breaking or have broken, because we've depended on debt. We've depended on globalism for 30 plus years, and now that is no longer working. It's basically pushing on a string. It doesn't matter how much debt you inject. Now, if we print money, inject money, we create a problem, because we create inflation. So we don't have that tool anymore. It's like, how much money? So they printed $4 trillion last time in 2020 to prevent a recession, and look what they created. They created all this inflation. Now, what are they going to do? They're going to print $8 trillion? They can't, because that'll just create more inflation, and they'll destroy the dollar, which is a big, big problem. But not only will they destroy the dollar, but they'll destroy the bond market. And that's kind of what I've been expecting all these years, is that the end game, if you will, for the U.S. is basically defaulting on our debt, because you cannot print all of your needs, if you will. You can't just keep printing $2 trillion without foreign money. If you just print it, historically, when we need to borrow money, we don't print it per se. We basically borrow it from others. And now we're gonna, in other words, we let other people take their dollars and buy our bonds. Now the Fed is going to print money to buy the bonds. So you just keep injecting. At a certain point, that doesn't work, and that's where I think we're going to hit that within 2 to 3 years. But next year, it all is going to come crashing down, I believe. I think that 2024 or 2025, I don't know which one's going to be worse. I think it's going to be 2024, because usually the bad stuff usually happens first. But 2024, 2025, one of those 2 years is basically going to be the worst economic year since the 30s. And not necessarily economic news, but the tone. If where there's basically, it's just dead. It's basically the malaise of the 70s on steroids, if you will. It's like there's just going to be, one bad news event after another, and there's no getting out of it. But the tone is that's that fear trade that's coming. The tone will be, we're screwed. The Fed can't fix this thing. We can't get it going. It'll be just like the 30s where they couldn't get the economy going again. That's what's coming. It's going to be malaise, stagflation, no growth. I call it muddling. We're basically going to get stuck in the mud. And the thing that's really nasty about all this is that our standard of living is going to start to decline. And when that standard of living starts to decline, America, as we've known it, is going to start to basically decline. And it's going to be basically the end. And then it'll just a matter of how long do we go before the country breaks up. And I think before the end of the decade, the country will have broken up into at least, multiple countries. That's my vision.
That's something I wanted to ask you about. I have several more macro questions to get with you. First, by the way, thanks everyone for being with us. If anyone wants to raise your hand, be a part of the conversation, ask Don some questions, chime in with your own opinion, feel free to raise your hand. We'll get you involved. Don, a year ago, I got it wrong. I never would have guessed that the Fed could get rates this high. I didn't see it coming. I didn't understand how it was possible, and it happened anyway. Can you help me understand how they got away with it? Especially with all this printing now. It just boggles my mind. I literally don't understand how it happened.
Yeah. So they got away with it because they injected $4 trillion, and they just pushed all this money into the system, and that money hasn't basically worked and created a lot of inflation. But that money it's been sloshing around so much that it prevented a recession. Here's the other kicker, the thing that they didn't realize that was going to happen to them. And it's, Luke Groman really nailed it I think it was last week, might have been Monday though. He called it a doom loop. And basically what the Fed did was, when they raised rates so high, so fast, is that it allowed investors to make money off of that. So it was like free money. So you had all this money printing, right? And all that money printing was like free money. And so people were sitting on all this cash. And then the Fed raises rates to 5%, and they're sitting on all this cash. What do they do with all that cash? They go and put it in, money market funds or short-term bonds and generate more cash. So the Fed, by raising rates, they actually strengthened the economy by flooding more money into it and creating more liquidity. But eventually, that wears out. That wears off. Those high rates eventually bite you. So basically what they did, by raising rates really fast, it allowed them to inject even more money. And then the federal government had these huge deficits. Like this year, it's $2 trillion. So that's more injection. That's more liquidity. So you had this dual liquidity going on. You have the liquidity from the government, basically, borrowing all this money. And then simultaneous to that, you had the Fed expanding its balance sheet. And then you had, simultaneous to that, you had higher rates. So anybody that had money could basically go and stick it in a money market and get 5% or 4% back. So you had all this, basically there's all this injection. But those high rates are starting to bite, and they're starting to slow things down. What the Fed did not anticipate was that the high rates were going to be counterproductive to what they're trying to do. So the high rates are supposed to slow the economy down, and they're actually helping the economy. But eventually, and so now here's the doom loop. The doom loop is, okay, now the Fed's trapped. Their high rates are basically not allowing inflation to go down, and it's not allowing the economy to slow, and it's creating all these strike. People are striking. People are raising, want 20% increase in their salaries, which is creating, it's basically that inflation doesn't really want to go away now. It's not going back to 2%. And simultaneous to that, if they lower rates, and now they're creating a recession. By having high rates, they're going to create a recession. Now, simultaneous to that, now they can't lower rates, because if they lower rates, it's just going to kind of feed the economy. And then if they feed the economy, it's going to create stagflation. And then the more they print, they're injecting, but they can't win. It's a catch-22 for the Fed now. There's no way they can have a perfect landing here. It's like, and here's the killer. The killer is this, is that how do they prevent a recession? Because if they don't prevent a recession, then you get into that 2010, 2011, 2012 scenario where they were scared to death of a recession. Now we're back into that same situation, but nobody's afraid yet of a recession. You know what I was talking about earlier about how nobody's afraid yet? You wait. Once we start moving into a recession and the stock market basically goes down, I think it's going to go down and go below 3,500. You go below 3,500 on the stock market and you go into a recession, the fear is going to go through the roof. This is why, I talked about, I didn't mention this earlier about, what's going to drive gold, what's going to drive the fear trade. Well, my feeling is that once the S&P goes below 4,000, once it gets below 4,000, that's when the fear trade will start to ignite. Now, I don't know when gold gets a bounce, but I think it's going to be somewhere around 3,800 on the S&P. Now, I didn't like gold's price action these last 2 weeks, going down to almost 1,800, so quickly. It's like, oh no, this is bad news, because now it's like I don't see 1,800 holding. Because the S&P, when it goes below 4,000, I think gold will get dragged down and it's going to get a 17 handle. I'm now in the 1770s, my floor now. I'm just hoping. I was hoping at 1,800. The bad thing about hoping that you're gonna hold, you just usually don't, right? So I was hoping we held 1,800. I just don't see it happening. So now I'm down to 1770. But once we get the S&P down below 4,000, the fear trade is going to be. We're going to be getting close. I do not see the S&P going all the way to 3,500 and gold getting dragged down to, say, in the 1,600s. I don't see that happening. I see gold getting a bid. When does gold get a bid? I think it's going to be around 37, 3,800. It gets a bid. Once it gets a bid, I'm telling you, it's going to be off to the races. Off to the races once it gets a bid. There'll be no stopping it, because everybody's going to know the gold's going higher. They're going to know it's cheap. It's like, wait a minute, this doesn't make any sense. The entire global bond market is basically in jeopardy here, and gold's down at, let's say 1770. It's not going to make any sense.
I agree with you. I'm looking at 1760-ish for gold myself. And again, it's predicated on part of what I'd alluded to at the onset of the interview and kind of my own personal opinion here, what I see in the charts. And we're going to get some false breakdowns. I think 1760 probably holds. I think in part, look how resilient gold is. I mean, it feels bad. And it's not good, but I don't think it's as bad as it looks. I think gold's been quite resilient. I think it will continue to be. And we'll go a little bit lower, but I think that it's preparing for what's next. And I feel very good about it. So, Don, a year ago, consensus was kind of, if and when the Fed capitulates and they roll over on rates, well, the market goes up. So have we reached the point now where if and when the Fed gives up on this fight, that the markets go down too, or?
Well, the one thing that people don't understand about the Fed is the Fed is supposed to have a dual mandate of full employment and price stability. Well, that dual mandate got broken in 2008 when Hank Paulson went to the government and said, "Look, I need you to bail out. I need bailout money. We need to bail this system out." And everybody basically said, "Yeah, sure, let's do it. Let's start doing the bailouts." But when Hank Paulson did that, he didn't really realize what he was asking from the Fed. He was asking the Fed to basically take on a new mandate, which is not allowing the economy to break down. You're now in charge of basically keeping this whole stack of cards together, house of cards together. Because if you remember, the Fed was actually basically helping the Treasury do the bailout. It wasn't just the Treasury doing the bailout, it was also the Fed. And so the Fed, they kind of changed. And if you look from that point forward, the Fed never really allowed the stock market to falter. Every time the stock market went down 5%, suddenly the money supply went up. If you look at the money supply and you look at the stock market from 2010 to 2020, every time the stock market went down, the money supply went up. And that was the Fed basically not allowing it. And so the Fed was managing the economy. So the Fed's not, I think their number one mandate, their mandate flipped. It changed in 2008. It used to be full employment and price stability. I don't believe for a second that's their mandate now. I think their mandate has changed, and their mandate now is basically manage the economy, make sure the economy doesn't fail, bail out whoever you have to bail out, and that's your mandate, and everything else is secondary. Price stability is secondary, full employment secondary. Notice how they don't really even care if there's if you're reading between the lines right now, you will see that the Fed doesn't even care if people get laid off right now. If unemployment goes up to 8%, they don't care. and here's why they don't care, because they want their tools back. Their two tools, they only have two tools. Their tools are the ability to lower rates to zero and the ability to print any amount of money they want to print. Those are their two tools. Well, guess what? They don't have either one right now. And they're paranoid. They know, it's hard to explain. I don't know if there's a good analogy, but if you don't have what gives you strength or whatever, you're going to do anything you can to get that strength back, and so they're trying to get it back. They're trying to get their strength back. There's two tools. And so they don't care about full employment right now. They don't even care about inflation right now. If inflation, and that's the reason why you ask why, how do they raise rates to 5%, right? How do they raise it to 6, 7, 8? They're not really raising rates here, I think, to kind of lower inflation. I think they're raising rates here, or maybe it is to get inflation back under control. I think a lot of it has to do with, well, it basically comes down to their tools. They got to get them back. So they're doing everything they can to kind of break the economy. They want to get it back. They want to get it back to where it was, 2014, 2015, when they basically, it was kind of a kumbaya type of thing where they were in complete control. And so,
right. 98, if you could please mute till we call you up, buddy. You got a lot of static and reverb there. We'll bring you up real quick in just a second. Don, let me follow up with you here. It's only October, so it's a little early to do a year in review. But I kind of like to pick your brain and kind of see where you are. I trust your opinion. You've got a good grip on the macro. So over the course of this year, I mean, what piece of data, macro data, domestic data, whatever kind of data was the most concerning to you or the most surprising so far in this year?
There's a lot. There are a lot of data points. That's one of the things that kind of blows my mind, that Wall Street is cherry picking the data because they're not looking at these big, huge elephants, right, that have occurred since 2020. And they're still in play here. I mean, if you look domestically, if you look at, I think that small business has been obliterated from COVID, and I just, I think that's damaged the economy significantly, and I really don't think that the economy is going to have a hard time basically getting back on its feet because of the damage that it did there. But that's kind of the starting point. If you look at commercial real estate in this country from COVID, I mean, the big cities are like 50%, 50% office space. I mean, my goodness, that is just massive. And nobody's really talking about that. About the commercial real estate is getting ready to blow up. It's like 2006-07 for the housing market. That's what's coming right for commercial real estate, and that has to kind of work its way through the banking system. Those are kind of massive kind of situations. So the combination of small business and then commercial real estate and banking, all three of those have been severely damaged. And that isn't even the worst part. It isn't. The worst part is that the U.S. economy has basically been living off of low interest rates. It's the only way, and now we don't have them anymore. So we've lost that. We've lost our foundation, and so And then you got the demographics. You got basically the baby boomers are retiring left and right. And those baby boomers, when they retire, they take their money and go home because their income basically gets shut off. They no longer get those paychecks every month. Now they're living off of their savings. And when you're living off your savings, you're generally probably not spending it. You're not spending it aggressively, but you don't have that income, and so the income declines. So the demographics, that's kind of a nightmare for the country. We have this demographic problem simultaneously, right? That we have all these other problems that are looming, but we haven't even gotten to the worst part. The worst part is that the U.S. government lives off of the U.S. dollar being exported to the rest of the world. That's our number one export. We export dollars. We export dollars because we export bonds. And the rest of the world, because of not the rest of the world, but half of the world, because of the Ukraine war, is basically saying, look, we're not really happy with this situation where we have to use dollars when those dollars are getting inflated because we're printing like crazy, right? We're creating inflation. So now we're exporting inflation. Those bonds are losing their value, and other people are going, I wonder if I should hold these bonds. I wonder if I'm even going to get paid back on my principal. So the dollar is actually now, with the whole term de-dollarization. We talked about de-dollarization prior to 2020, but now it's becoming a big, big problem. Now, the BRICS was basically, a nothing burger in August, right? Everybody was thinking that the BRICS were going to create a new currency, and they didn't even mention a currency, in their statements in August. So it was a nothing burger, absolutely. But I guarantee you, behind the scenes, Russia and China are still talking about what the heck can we do here? We need to do something. We need some type of a trading currency, trading token. That's not dead yet. That's not gone yet. Whatever they end up doing is not going to be good for the U.S. The U.S. used to have total dominance on international trade. Now that's going bye-bye. That's probably the biggest elephant in the room is the dollar, international trade, exporting bonds. I've been saying that the U.S. is going to default. I wrote a book called The Demise of America, and it has a dollar bill on the cover ripped in half because that's where the dollar's going. The dollar's in big, big, big trouble. But I think that the dollar, I basically, when it was at 98, I said it's going back to 105 to 119, 110. So where I saw it, the dollar wasn't done yet. It had another run in it. Basically because the stock market was going to go down and people were going to run to dollars as a safe haven. And now interest rates have went up and the dollar is kind of front run this move that I see coming. But I do think we're going to 108, 109 before this thing rolls over. But this time next year, I see the dollar sub 95.
All right. That's a good run. Reminder, if anyone wants to get involved with the conversation, all you have to do is raise your hand, request to speak. We'll bring you up, talk with Don. First up is 98. You got the floor, bud. That's okay.
Yeah, no, I'm here.
There he is.
I'm here. I don't know if you can hear me.
Yep.
You got me? I wanted to ask you, do you recommend just playing gold and silver through an ETF instead of individual names?
Yeah, absolutely. If the thing about gold and silver mining stocks is that they're highly risky. It doesn't matter which company. There are no safe gold and silver miners. They're all risky. So unless you kind of you're a trader and or you know what you're doing, then you could do maybe 10 stocks or less. But it's hard to pick winners. I don't even try to pick winners. I try to pick potential winners. So if you're not going to own, I basically me, I say a minimum of 25 stocks. If you're only going to pick 5 or 10, I just don't see the value in that. If you're only going to pick 5 or 10, stick with the ETFs. Because if you're going to pick, and then if you're going to try to pick 5 or 10 like stocks that are like 10 baggers, if you will, that's really not the way to do it. Then, first of all, you probably want to read my book because I talk all about how to understand the risk of these stocks. But definitely. So I think that I really like ETFs. There's probably 5, 6, 7 pretty good ones out there. So you can actually buy like 5 ETFs. You got in the silver space, there's really only, maybe there's three, but you have the SIL is the biggest one. And then you got SILJ. And I don't know if there's a third one that's like 50% silver, but there are some that have a significant amount of silver miners in it. And there's a lot of, probably 5 gold miner ETFs. So buy a bunch of the ETFs instead of buying like 5 or 10 miners. But then once you own the ETFs, then that can be like your base. Then you can maybe play around with some of these 10 baggers, because you're not going to get a 10 bagger with ETFs. You're only going to get maybe a 5 bagger if gold goes to, like somebody asked me today, this is good timing. A guy asked me today, how is SILJ and GDXJ going to do? And I told him that SILJ would probably be an 8 bagger and GDXJ would probably be a 4 bagger. Those are basically if gold goes to 3,000. So you're going to get pretty good returns, especially with SILJ. But if you get both, I think if you just do ETFs, I think you could easily get a 4 or 5 bagger, which is a hell of a return. I mean, it's probably, maybe outperform me. I'm shooting for basically a 4 or 5 bagger, but ETFs make a lot of sense.
Thank you.
Sure.
All right, Don, picking back up with you here. I'd like to run this by you to pick your brain because you've been around long enough to see the FOMO, to see the fake outs, to see the things that end up being nothing burgers, right? So when you see headlines about Costco selling out of gold as fast as they can get it, is that any kind of a tell or a signal to you about sentiment at all whatsoever? And to me, it's hard to even know if that means anything because I don't know. Maybe they're only getting 10 bars a store. How hard is it to sell out of 10 bars or 10 ounces, when you got thousands of people going through the store today? But on the other hand, maybe it's making it a little bit more accessible to retail. I don't think a lot of people go to coin shops, right? But a lot of people go to Costco. So is there something to it? What do you think?
Yeah, so I've been doing this for a long time. I've actually been a gold buck since 1991. I mean, I go way back. And back in the 80s, I actually didn't like what Reagan was doing with, he basically was having large deficits when the economy was growing at a fast rate. I'm going, what the hell's going on here? Basically, the U.S. got off the train track in the 80s, but nobody really wants to admit it. But my point is this, the reason why I'm giving you a real quick historical overview is the point that I've been watching this whole gold market for all these years. And I think that Costco is selling, one thing that's beautiful, Costco is known for quality, right? They're actually selling PAMP bars, which are probably the best gold bar you can buy.
I didn't even know that.
Yeah, they're selling PAMP Swiss bars. They're beautiful bars. They're fantastic bars. Those are the bars I recommend people buy. And so the thing about gold, and the reason why I think it's so significant, and I'm seeing it, is that people are now taking an interest because they're just noticing the world really turned crazy in 2016. When Trump got elected in 2016, the world just went nuts, right? CNN, they covered Trump 24/7. It was just like, what the hell's going on? We've been in crazy land since 2016, and it's just going to get crazier. And like I said, 2024 is going to be the biggest change that this country has faced. I mean, we're going to look back. 2024, in my opinion, is going to be much more significant than 2020, as hard as that is to believe. Because in COVID, you kind of knew it was going to end. In 2024, you're not going to know if it's going to end. So that's going to be the difference. But people are starting to feel the craziness, and they're starting to say, I think I need to buy some gold. People are buying gold at Costco who would never have thought about buying gold before 2020, or even say before 2016. Nobody would even, so people are thinking about gold now for the first time ever in their lives. I think that Costco is tapping into that zeitgeist, and they're basically saying, you know what? People probably we sell gold, they're going to buy it. So just sell it. I mean, it's bizarre that Costco would sell gold. It makes no sense. I mean, they don't sell power tools there. I don't think. Do they? Do they sell power tools there? I mean, they don't. So what the hell are they doing selling gold? I mean, it doesn't make a lot. It doesn't really fit them. I mean, yeah, they sell groceries, they sell food, absolutely, they sell clothes, but they're and then they sell televisions. They do sell and of course they do pharmacy and stuff like that. But they're basically kind of a grocery store on steroids kind of thing. Why would a grocery store, a Walmart, but Walmart sells gold online, but they don't sell it at the store. I guess they're kind of emulating Walmart to a certain extent. Like, okay, because we can sell, but maybe they're expanding their product line. But by and large, I think it's kind of bizarre that they're tapping into that. I call it the zeitgeist. It's kind of starting to. They're basically seeing. They just see their people. Our customers want gold. This is weird, but I actually like to kind of figure these things out. It's like, why would they do it? I actually think the reason why they're doing it is to bring in new customers. They're bringing new customers in, basically saying, people that basically want to buy gold that aren't members at Costco. They don't really want to buy gold as the local coin shop. They don't trust their coin shop, but they'll trust Costco, so they'll join Costco to buy gold. I mean,
you have a point there with that, because I love precious metals and have been involved with them for a while, but I'm always a little iffy about the local coin shop. We've got a really big one down here that's pretty good, and I'll drive all the way across town, 30 minutes out of my way just to go to that one because I don't want to go to the little one next door. They kind of sketch me out sometimes. You might actually be onto something with that. But, the first thing I thought about when I saw that headline is, they also sell long-term food storage, like emergency food. So all I got to do now is get ammo, and they'll have the trifecta.
Yeah, I don't think that's happening.
Yeah. If anybody wants to speak with Don, feel free to raise your hand or request to speak. We'll bring you up. Next question comes from L1. L1, you're up. Feel free. Looks like it fell off there. Oh, reconnecting. Give them a shot. I guess while we're waiting for them to come back on, I'd like to dip back a little bit because we had kind of alluded to housing a little bit. And how substantial is this housing market in the big picture? I mean, people are getting priced out of homes left and right. Should we expect the housing market to crumble too? I mean, it stands to reason that this is kind of getting out of hand, right? I mean, mortgages are doubling, and it's running away. Could it be a catalyst of its own, similar to 2008, or is it going to kind of be a domino to fall towards the middle? Do you have any opinion on it whatsoever?
Well, I definitely have opinions. I have opinions on everything, right? But I definitely expect housing to basically fall significantly. I just don't know how much. Is it going to be across the board? I definitely expect nationally to drop at least 10% when the recession hits. If it doesn't drop 10% when the recession hits, I'll be shocked, right? So the question is how much more does it drop? Does it go down 20%, 25%? I think there's a chance it could, because now the one thing the Fed is going to do is they are going to lower rates. They have to. Federal government cannot handle 5% 10-year. They can't even handle 4% 10-year. So the Fed knows this. So the Fed is, kind of, they're doing a balancing act here with higher rates. It's kind of weird that they want to maybe raise rates in November when they know they have to lower rates before June. I think they know they have to, because the federal government cannot have a 1.2, $1.4 trillion budget where they have interest payments alone. I don't think the Fed's going to put that kind of burden on our balance sheet. And so I think they have to lower rates. So I'm expecting the Fed to take the 10-year, try to push the 10-year down. They don't control the 10-year, right? They only control the short term. But I think that if they do take the short term down to, say, sub 3%, I don't know how long it's going to take them to take it to sub 3. They probably, if they're going to lower it a full 100 basis points at once. But I'm expecting them to take rates next year down to, I think they're going to try for 3 to 2.75 is kind of my target, where they're going to try to get it to, in order to alleviate, if you will, two things. One is the Fed's balance sheet, but two is the economy, once it goes into a recession. So they're going to have reasons, but simultaneous to that, then inflation is going to be here to stay, kind of thing. So it's kind of that's why I said there's nothing they can do. They're trapped. The lower rates are going to create inflation. They keep rates high, they're going to keep inflation going. So they can't. There's nothing they can do about inflation here. But housing, even if they lower rates, let's say they take the short term, let's say 3%, they take it to 3% next year. That's going to take some pressure off the housing market, because then you're going to basically drop it. It's at 8%, about 7.75 right now. So you're probably going to get rates back down to 5.5. But people are going to be losing their houses. There's going to be a lot of people, can't afford their houses. I think there's going to be a lot of inventory that comes on the market. The B&Bs are going to be dumping houses left and right. So I think inventory will increase and prices will drop. So my expectation is, I think we're going to see a 20% drop over next year. I don't know if it'll drop 20% in 12 months. I doubt that. But we're probably going to see a 10 to 15% drop in 12 months. And then it'll go lower. So my target is 20% drop in housing.
Appreciate the answer. Yeah, I can tell you just anecdotally that I'm in construction. We build multifamily all over the country, right? So new apartments. And we have never been so busy, especially all throughout the South and the Midwest. I mean, it is just left and right. We can't take any more work. We're turning down more work than we have. I mean, it is relentless. They just don't stop going up. And it feels like a lot. It really feels like a lot. And part of that, I figure, is you have so many people leaving the Northeast and the West, and they're all moving to the Midwest and the South. And it's really getting populated quite quickly. And of course, you have immigrants coming over, and I mean, it's these people got to have a place to live. Housing's really expensive, and these apartments are going up so fast, Don, so fast, all over the place, and it feels like too much to me. It really does. I could be wrong, but it sure feels like a bubble in these multifamily apartments. But with housing going the way it is, who knows how it ends up? But goodness. It's a lot. Also, anecdotally, to chime in on something we had spoke about earlier, is new people getting into gold and silver. I actually know a professional basketball player. He's not in the NBA. He plays for another country, the national team. And he reached out not too long ago looking to make a pretty large investment in gold and silver. He wanted to get exposure. All right. And this guy's never bought an ounce of gold in his life. And so I do think you're right about that happening. I do think that people are kind of becoming aware. I do think that, inflation has, invaded the consciousness. People are aware of it, and it's taken hold. And I think people are looking for ways to hedge against it. And I think you're starting to see it play out, and it's taken a while and it's slow, but it is happening. And we have these anecdotal examples of it. And Costco's one of them. My buddy's another. And, it's happening. It is happening. If anyone else wants to come up, ask a question, feel free to raise your hand, request to speak. We can talk macro, gold, silver, stock picks. Actually, I'll tell you what, Don, let's get back into the stocks, if you don't mind.
Sure.
I got a couple I'd like to ask you about here. So Osisko Development is one that I have been tracking and I own. And it's had a very nice rally from a low of 250, and it's going the other way of the market. It's doing its own thing, and it looks pretty good down here. It might be trying to bottom. How do you feel about Osisko Development, where they stand, where they're going, and where we are in price right now? Market cap of $262 million.
Yeah, but before I do Osisko Development, I wanted to mention a couple things about housing. So I actually think that what's going to happen when this recession hits, it's going to be somewhat shocking, if you will. I think that a lot of the unemployment is going to go up substantially, and that and I mentioned this before, that basically I think foreclosures are going to hit historical levels, and that we're not going to see bailouts, if you will, and people are going to lose their houses, which is going to create inventory. And so I think people are actually going to be moving in with each other. So you're going to start seeing, more people living together, if you will, families moving in, families and friends moving together. So I think you're right about this housing bubble, if you will, overbuilt. It seems like we don't have enough inventory. I think we're going to have too much. I wanted to mention that. And then the other thing about, go ahead.
No, if you're still on the subject, go ahead. But this is a good subject, and I'd like to follow up.
Yeah, you can follow up. So I just think inventory is going to really expand, if you will, because I just think people are going to lose their jobs and move in with other people. And then I think inflation is going to be really, really sticky. And this goes back to your thing about gold, about people being interested in gold. If inflation is sticky, and let's say that it doesn't go below 4%, at 4% annual inflation, your dollars, if you just have money in the bank, is basically bleeding, if you will. So high inflation is basically you're going to have a combination of two factors pushing gold higher. One is going to be the fear trade, where people are just afraid, basically the banks are going to close or whatever. I need to own gold. But the other one is I'm tired of losing money because the dollar keeps getting worth less and less. That 4% kind of inflation. So you're going to have this a dual thing that kind of brings new people into gold. But go back to housing, and then we'll talk about Osisko.
Well, I'm just curious. Let me throw you a curveball here, because remember what happened during COVID. I mean, you have a really good theory. I mean, is it plausible that we get some excuse not to kick people out? Well, I guess you may have said that already, didn't you, about not vacating and whatnot? I mean, it feels like that we've already set that precedent, right? And that this could happen again, and people, they get bailed out.
I don't think it's going to happen this time. I don't. I just think that we'll see. I mean, it's a possibility, but I think COVID gave them an excuse. But now, I just don't think they're going to have a good enough reason to allow people to stay in houses that they can't pay the rent on, can't pay their mortgage on.
I'm going to press this nail one more time. I'm going to press it one more time. You think about when the country's in relatively good shape and the economy's good. I mean, our citizens can't act right anyway. They go out and riot and tear stuff up. So imagine a situation like that. Do we have any political leaders with the strength, with the cojones, to actually tell them that, sorry, life happens, get over it, go find a box?
Well, one thing is, it's going to be interesting which way it goes. It'll be a little different from state to state. I think that's something to consider. But bottom line is this: the bottom line is this: is that there's going to be a lot of people that cannot afford their mortgages. That's the bottom line. So that's going to put downward pressure on housing. Okay, let's go talk about Osisko Development. So, I don't own this stock. I actually have it on my buy list. It's actually very, it's at the top of my buy. It's not the very top, but it's definitely a stock that I probably will end up buying. And the reason why is because it's dropped in value, and I've been watching it closely. And it's basically right now it's printing it as 650% return, which is a 6.5 bagger. So I like to buy stocks that have 5 bagger potential, and then a solid 5 bagger with 10 bagger potential, and they kind of fit there. And so the upside's there for me. So I like the upside. I also want to own as many mid-tier producers in Canada as I can, and their Caribou project is really solid. 5 million ounce high grade underground mine. It's one of the better feasibility development projects that out there right now today. So it's basically they're going to be a 250,000 ounce producer. So Caribou alone, in my opinion, makes this company very attractive. And you're getting the Trixie mine for free. So the Trixie mine, because there's value at 350 million, and a 250,000 ounce producer, in my opinion, is worth $2 billion at $2,500 gold. And they're currently at 350. So valuation wise alone, Caribou, for me, totally makes sense. The ASIC at Caribou is projected to be $1,000. So it's a very, economic mine. I think the location is fine. It's in British Columbia. It's not in the north where it's more in the middle, so it's not, the climate isn't terrible. But again, you're getting this Trixie mine, which is they just acquired. You're basically getting it for free, and they think it has at least 2 million ounces. And if it has 1.5 million, because it's high grade, they're going to basically take this thing to 80 to 100,000 ounces a year. So you're adding that on top of Caribou. And, you're looking at, 300,000 ounce, I think north of 300,000, 325, 350,000 ounce producer. So depending on what we get, I think that's basically a $3 billion company. So I'm valuing it at 2.7 billion, which I think is a good number at $3,000 gold. And I'm valuing it as a 300,000 ounce producer. So it really checks all the boxes valuation wise. I think their management team is fine. I don't think, they still have to kind of prove themselves that they can basically build and operate this mine. Osisko Osisko Mining, they're building a mine right now. You got Osisko Development, Osisko Royalty, and they have an exploration as well. So this is really the first time that Osisko's kind of got into producing. Hopefully they can pull it off. The other real positive about this is Osisko Gold Royalty owns 44% of the shares. So I love it when you have a big strategic holder like that, because now they don't have to sell. Somebody calls them on the phone and says, yeah, we'd like to buy your company for 100% premium. They just basically, we're not for sale, see ya. When you got a strategic shareholder, that's not selling, nobody can buy you. So even though they're cheap, they're going to take this thing to production. That to me is really important. So I like to look at like 5 different things on development stories. I've mentioned all 5 of them in this little review here, but yeah, it looks really solid. I hope that I can get it at, it's at 345 right now. I'm hoping I can get it at 350 or lower. Fingers crossed. So actually showing it in New York right now at 347. So it's trading, right at where I'd like to own it. So my next buy is going to be Coeur d'Alene CDE. So I'm not going to get to Osisko until next month. So I might not get it at this value. We'll see. Fingers crossed. So
Yeah, it's interesting because in the face of this sell-off, it's up 37% over the last 2 weeks. And so I was curious of what drove that run. It looked like it was trying to bottom, and maybe if there's some inside information, generate that kind of a rally. But it looks really good.
Yeah, the thing is pushing it is Trixie. Again, you're getting Trixie for free. And if Trixie is going to have some good drill holes, you got to buy this thing. It just got way too much leverage. But yeah, Trixie's had some pretty good drill holes. That's what's driving it.
Very good. We've got a request to speak. Nick Mandu, what's up, buddy? You have the floor.
Hey, what's up? I'm really enjoying this interview. Thanks for bringing it on. I'm just curious about if there's any specific picks in silver and gold miners that you like, or if there's any ETFs that you recommend. I have a couple miners, but I'd like to diversify, obviously.
So a good starting point would be my Substack. My Substack is mostly free stuff, but I posted. All you have to do is go to Substack and just look for Don Durrett, and I posted my notes from Beaver Creek. So there's three separate postings there that have all my favorites from Beaver Creek. So that would be a really good place to start. I'm thinking if I posted anything else. Well, if you are a member of Gold Stock Data, I actually posted my ideal portfolio, which has 80 stocks in it, and they actually are ranked. They actually have I put a ranking in there, 7, 8, 9, and how much I like them. So there's that. If you want, you want 80 stocks with me, giving you all these rankings. So you have Beaver Creek, and then if you join GSD, you have those 80 names. So there's that. I will tell you three companies though that I just think, and we talked earlier today, if you were here at the very beginning, and we did talk about, these silver miners that are just crazy cheap, like First Majestic, Hecla, and Coeur. I just think they're going to participate. If silver goes from 30 to 50, I think those three names are all going to participate in a big way. I think they're kind of like, kind of must own names. I would throw Silvercrest in there as well. Those four, I think, are going to participate in a big way. I'd also expect Pan American to participate. They just had a problem with their Colorado mine, but probably if it dropped, it's probably an opportunity to buy it. So you have those silver names. But I mentioned earlier that silver is going to outperform gold by 4x. So I would definitely. And you said what there's two silver ETFs, SIL and SILJ. I think both of those just make a lot of sense here because you have so much leverage in silver. And then GDXJ, I think, is always a really good name. And then Sprott has an ETF for gold miners. I'm not sure if they have one for silver miners. They probably do. But those would be the ETFs that I like.
Okay, my follow-up, and I do love First Majestic, both as a stock and their coins are actually, or rounds, I guess, are really nice. I have various different sizes, 5 ounce, half ounce, and full ounce ones, or even a kilo, actually. They're all really nice. So really good quality stuff, but I know a lot of their mines are in Mexico. So is there any risk with a rapid rise of silver, of kind of destabilization in silver mine regions, or... and what's the risk, I guess, you think there?
Yeah, so the risk is really increased in Mexico. It's basically become, it's just been a slow, steady decline over the last 10 years, and basically friendliness, country mining friendliness. We've had basically a lot of strikes. We just had a strike that was just resolved by Newmont, the Penasquito mine. We've had a lot of robberies. We just had a robbery at Colorado for Pan American. I was just looking at their share price. It really didn't drop much. And we've had a lot of road blockages. You had Equinox, their Los Filos mine has had a couple of road blockages, and the government basically doesn't come to help them. It's like if they want to do a road blockage, a lot of times the road blockages are done by the union, or it's done by people that are affiliated with the mine, and the government doesn't come and help them. It's like, okay, you go negotiate with these people that are blocking the road. So the government hasn't really been coming to the aid of these countries when you have these issues. And so and then the government, they just raise the tax 5%. That's going through the courts. So we have, it's not really a pretty picture. And I'm overweight in Mexico, and I'm just hoping, at $50 silver, I'm going to basically, unload some shares for sure from Mexico for that reason. It's problematic that, the silver, a lot of the silver mines, Mexico's number one, in my opinion, for investing in silver miners. I love like Silver Tiger. I love Go Gold. These big Discovery Silver. Those are my three favorite, silver development stories. And then you got Chesapeake as well, which has basically silver offsets. It's basically a gold mine. But that's only four names. There's like 20 silver names. You got Guanajuato. There's a bunch of silver names in Mexico. You got Vizsla. Some beautiful projects going on. Fresnillo. You got Mag Silver and Fresnillo. Just a lot of silver names in Mexico. So, all we can do is kind of cross our fingers. It's hard not to invest in those projects. I mean, they're just very, very high quality. And you got this huge leverage. If silver runs from 22 to, 60, 80, 100, just huge leverage. So I think you have to play it, but, it's one of those ones where you have to kind of hold your nose. I just don't see how you cannot be overweight. Now, all that said, the one thing that you can recognize is that the companies that have silver mines in good locations are going to benefit, because people are not going to want to, they don't want to be overweight in Mexico. So who are those companies that are not in Mexico going to benefit? Well, the first two that come to your mind is Hecla and Coeur. Hecla and Coeur, they're basically in Idaho and Alaska and in Canada. They're going to benefit big time. When silver goes from 30 to 50, institutional money is going to be buying Hecla and Coeur like candy, because those are the plays that are in good locations. The other place that I like for silver that people are really ignoring is Australia. There's probably 4 silver plays over in Australia, but I just love silver mines. Silver mines, they're going to start off at 6 million ounces a year, and then they can go and add 2 million underground, because they have an underground mine underneath the pit. So that'd take them to 8 million. So they're going to be an 8 million ounce producer, and they're valued, I think, about 150 million. But they're going to get a huge multiple once they, basically begin construction. It's permit ready. Next year they're going to start construction. I think once they start construction, I think that mine's just basically going to double, triple. There's a couple mines that are just way, way mispriced. Silver Mines is one. The other one that's mispriced is the Aris, but they're a gold miner. Because once Aris starts, construction of Marmato, basically Marmato doubles their value, and Silver Mines the same. So a lot of these development plays, once they start construction, they're pretty much going to double in value, I think. But you got Silver Mines in Australia that I think is, just makes a lot of sense because of the location. And the other one I like in Australia is Investigator. They're a little lower grade, a little smaller, but I think it's going to work, really well once you get above $30 silver. And then there's a couple others. You got Moranin. I don't own it, but I'm watching it. And then you have Bobe, which is mainly a lead play, but they do have some silver. But if silver goes up, it makes it a really cheap lead mine. And so, but there's just not a lot of silver mines in Canada or Australia. So you gotta look around. Now go back into the U.S. I like Bunker Hill in Idaho just because of the location. Now Bunker Hill, there's some risk there. We don't know how. Anytime these development plays are never slam dunks, but just from the location alone, I like Bunker Hill. And then I like there's a couple other silver plays in the U.S. that are to keep an eye on. You got Silver One. They have the Candelaria mine. They're making slow progress, but I think, once silver gets above $30, maybe they start advancing that one, a little bit higher risk. Another one that I think is interesting, but a lot of people hate it, is America's Gold and Silver. Their Galena mine has fixed costs. A lot of people don't know this. It has fixed costs. 75% of their costs are fixed. So as they expand production at Galena, their ASIC just keeps going down, down, down. And their Casala mine in Mexico is very profitable. So the combination of Casala and Galena make America's Gold and Silver very interesting. That's one that people, they won't touch it because of management, but I think it's a very interesting play.
Well, that's been very thorough. I took notes on a lot of them and threw them on the watch list. I'll probably make a more diversified portfolio.
Excellent.
There. Really cool. Yeah, great advice. Thanks.
Sure.
Very good. And Nick, if you want to hear it again, obviously this will be reposted on YouTube, and I'll have it timestamped so you can click back ahead and catch your spot. Ted, you're up, buddy. If you're ready to go, come on. You got the floor.
Hey, thank you all very much. Good evening, Don. Good evening to everybody in the space. I wanted to ask a question, and right away, I'm not going to ask yet because I'm thinking you may or may not be able to speak intelligently and accurately on it. Do you have any experience with Gold Money Incorporated, and are you familiar with America's taxation on collectibles? 28% on collectibles. There's no short-term or long-term. And I'll let you all answer that question before I get on to the bigger question. Go ahead, please.
Yeah. So, no opinion on Gold Money other than I think that it makes sense for people who have a lot of money, if you will, and they want to diversify. It's like, what the hell? Let's just go and throw 500 grand into gold money, and basically they're going to hold your gold for you. And so it might be a good diversity play for somebody with a lot of money, but unless you're a millionaire, for me, it doesn't make sense, because I would rather hold the gold and silver on my own. Why am I going to let them hold my money? Right. So that's kind of my thought on gold money. There's another one. It's not on the tip of my tongue right now. It's kind of like a clone of gold money.
Okay.
It does kind of the same. You probably know who it is. There's two of them basically out there. Now the other one, the 28%, it's not. Yeah, it's not just numismatic coins. The 28% is not just numismatic. The 28% is basically also on bullion as well. So it's basically silver and gold. You're kind of screwed. They consider silver and gold a collectible if you have physical. So that 28%, you're kind of screwed on it, on the federal government side.
Yes, Don, thank you very much for addressing those questions. And I just want to say, I already know all the information that you provided feedback on. Very well aware of it. And I have a gold money holding. That's what they call if you have an account, or, if you've got PM stored with them. Well, actually, it's not stored with them. They're just an overseer. You're actually storing it in vaults throughout the world, private vaults, high security facilities, and they manage when you buy and sell and do an intervault transfer, et cetera, et cetera. My holding at gold money right now is I have 7,000 ounces of silver that are split between Brink's vault in Toronto and the Loomis vault in London. And then I store 21 ounces of gold within the Zurich vault, Loomis vault in Zurich, and then 20 ounces in the Brink's vault in Singapore. And the problem is, if I ever sell any of that bullion there, even if I leave the cash within the holding, that I've got to pay the 28% tax. Is everybody with me on this? Okay.
Yeah, makes sense.
Okay. So my thing, and my wife has really kind of been on me about this. She's like, Ted, every time that you buy gold at gold money or silver, you end up, of course, I have a monthly vault fees, storage fees that I've got to pay, and they're not unreasonable, nor is the premium. When you ever, gold money always posts a sell price and a buy price, for every day, and it fluctuates all throughout the day, just like the spot price does. And you end up paying about $40 an ounce premium on gold, and you end up paying about only 80 cents premium on silver whenever you buy silver bullion. So it's a great way to, avoid all the crazy premiums that have been going on since, I would say, 2020. All the physical silver that I stack back here in the United States, I was buying monster boxes of Silver Eagles when it was like $1.80 premium on an American Silver Eagle in 2017, 2018. And, to people that are new to this space, and they're going, okay, so to buy an ounce of silver or an American Silver Eagle, I'm going to pay $28 for, when the spot commodity price is $20 and change. Is everybody still with me? Can you hear me?
Yeah.
Yeah.
Okay. So gold money is a great, as you said, diversifier, so that I've got a physical stack here within the United States stored within a high security facility. Nothing is in my house or anywhere near me physically. But anyway, so
Do you have a question?
Yes, I do. I'm getting to it. Pardon me for droning on. My question is, what would you think about if we have a dramatic drop in silver and gold spot price for paper silver and gold? Would that be actually a great opportunity for me to sell or liquidate my position at Gold Money, bring that cash back to a U.S. bank, and because that way I'm not showing really much of any capital gains. My average price per ounce for gold at Gold Money across two vaults is probably $1,613 per ounce. And then my average silver price per ounce is, I think it's $17.46. So,
Okay.
go ahead.
Yeah. So this is just my opinion, right? So I basically said earlier that I only think this works. It only makes sense for basically people who are high net worth. So, for instance, you said you have 40 ounces of gold with them. That's 4 bars. You're telling me that you can't hide 4 bars in your house, 4 bars, and you're paying a monthly fee for those 4 bars. So yeah,
Exactly.
you got a low premium. You got a low premium, but that's how they get you in the door. Oh
Right.
man, I'm going to buy silver, but the longer you keep your gold with them, that premium, you end up paying more. Your premium goes up. You see what I mean? It just doesn't make
Exactly.
sense. It makes no sense to let them hold your gold unless it's so much gold you don't want to keep it in your house, or you don't trust, the bank's deposit box. Now, silver is even worse because silver, you used to have 7,000 ounces of silver with them. I've seen what they charge on a monthly basis for silver, and it's high. And so the longer you hold it, the longer they hold that 7,000 ounces, your premium just go up, 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 up. You see what I mean? My point is this: you're using Gold Money, but it doesn't work for you. It works for them. You're not a high net worth guy. You don't have
what my wife
1,000
keeps
ounces
telling
of
me.
gold. Well, she's right. She's
And,
right. So
I am paying
go and tell
about
her,
$68 a month in storage fees to
it
Gold
does.
Money.
I don't
And so,
need to,
yes, if I continue to hold, let's say through 2026, and I maintain that holding, then I am, I'm really, it's like I'm paying Atmex to buy a gold,
Yes.
right?
There's also a risk of if it does increase parabolically, that you might not get it back. It's better if you're going to get physical, you want to have it, I think.
Good point. I forgot that you're giving up your counterparty risk, right? You're giving that up. So yeah, good point.
Well, and the other thing is, I have thought about all these things you're mentioning, but it's great to hear, another adult smart guy. But the problem is when I recover, I liquidate and just.
All right. I think we may have lost him.
I think he was
United States from somebody like Atmex, JM Bullion, SD Bullion, something like that, and then I'm paying the premium again.
Yeah.
So I kind of feel like I'm trapped, and I kind of worked myself into the situation over the years.
You're not,
and I'm a little bit regretful. What do you think?
You don't have to pay double tax, though. You're not trapped, but you definitely want to. You definitely want to get out. Can you hear me? You want to get out.
Is anybody hearing me?
We can hear you, yeah, but maybe you can't hear us.
Let's go to the next question.
All right. Yeah, next question. Nick had a follow-up earlier.
Is
Nick,
anyone hearing me?
Yeah, Ted, we appreciate your question. Don's advice is to get out of it, and if you don't hold it, you don't own it.
That's right.
Nick, I think
you had a follow-up question
first. All right, hold on.
I think Aces was up first, and I kind of lost my train of thought at this point. But
okay, Aces, you're up, bud.
Hey guys. Hey Don, nice to see you again.
Hey, thanks.
Hey brother. I've owned mining companies for the past 15 years in Africa and South America. I'm in the Amazon rainforest at the moment. So if my Wi-Fi goes out, forgive me. 95% of the producing mining companies in the world, nobody on this call has ever even heard of. Right? So I put something in the nest, and maybe one back or two back or something back. Here, I'll put it again now. Metals run in packs, right? So when you're making copper, or cobalt or nickel or gold, for example, which I've made all of the above. I just reposted it in the nest. What happens is you're mining the material from the ground, and then you're crushing it, and then you're processing it. And what you're trying to do is concentrate the primary metal that you're going after. So if it's copper or gold or nickel or zinc or cobalt or whatever, you wind up accumulating a pile of material, a concentrate that you then further process on one side of the mine of the plant, and on the other side you're concentrating everything else. In almost every mine that I've owned in the world, and I've owned mines in about 16 countries in Africa and South America and so on, there's silver, right? But when you've got cobalt or copper or nickel or gold, you don't give a shit about the silver. It's like junk, especially, over the past 10 years. I mean, now silver is,
What grade are we talking?
well, the varying grades. It doesn't matter. I mean, cobalt.
When does it
No.
when does it become junk? When does it become junk?
It's junk when it's going down every day for a decade, which we saw, from 2000 and
No, but you got to have a cutoff for. I mean, it could be a high grade silver mine. At what point is it junk?
Don, hear me out, because we've talked about this before, and I'm not trying to be argumentative. I'm trying to be helpful.
Right.
Okay.
Okay.
All right. So from 2011, right, silver went from 42 to 14. Right? Copper went from 8,000 to 4,000. We know, right, what happened. Cobalt, the average grade of cobalt is probably about 0.6 of 1% of 1 ton. So it's a super low grade material, but it hit $90,000 a ton in 2018. So it's not so much the grade as it is the price. And the thing is that when you're chasing cobalt or you're chasing gold or you're chasing copper or nickel, the processing technologies are completely different. Night and day. You could have a copper mine in Mumbwa, Zambia, and have a copper mine 10 miles away, right, in another part of Zambia. And the processing technologies, the plant that you install, are completely different things. Like you couldn't make the copper from one plant to the next with the different plant with the different plants. So the point is that when you're chasing these metals, if you look in the nest, these metals run in packs. Almost every single time you have copper, you also have trace amounts of gold and silver, right? So, but if you're looking to make copper, you put in a processing technology, a plant, right, to make the copper. You'd have to put in a completely different processing plant for the gold and the silver and so on and so forth. right? There's oxides and sulfides and, you know, hydrometallurgy, metallurgy and pyrometallurgy, you know, all of these different goddamn things that I know nothing about. I'm not a metallurgist or a geologist, right? I'm a CEO. So the point is that when people talk about silver and gold, or any of these metals for that matter, 95% of the companies that make this stuff, nobody's ever even heard of. People know of the, you know, 300 junior miners who are mostly stock promotions, right? You know, and they know of the Newmonts and the Barracks and stuff like that. But you know, there's tens of thousands of other companies out there, Chinese companies, Brazilian companies, African companies, you know, Australian companies, South American, Guyanese, my company, that nobody even knows exists. So the thing that concerns me about this silver squeeze and the silver this and the silver that and the solar panel silver and all this other shit about silver is that there's silver in just about every tailings dam in the world. So if the silver price were to actually become interesting, which it's not, okay, gold is interesting here. I'm tickled to death. I make gold, right? So I'm tickled to death at the gold price, even at 18, whatever the hell it is, 1832. Shit, just stay here. It's a great price for me. You know, my cost is about $600 an ounce. So, but silver, that you can fire up a processing plant for silver and run your tailings and make silver. It's not
Well, that was my question,
right.
right? I said, what, you know, what grade, what's the average grade in those tailings?
Well, it's going to be different in every deposit.
I said average.
I would say from my own personal experience, which is all I can really attest to, probably about 75 parts per million. You see, when you make copper concentrate, okay, let's call it an oxide, right?
Wait, 75 parts per million, that's 75 grams?
No, that would be 7.5 grams.
Okay, that makes more
Right.
sense.
Yeah,
All right. Because
right.
my guess was 5. My guess was
Yeah.
5. So we're probably ballpark.
My own personal, that's just my mines that I've owned. Right.
Okay, so all right,
Right.
but you've done a lot. You've done a lot of mines. You've
But
16 countries.
yeah.
So you're
Well, they
saying
haven't all worked,
so
and they weren't all, you
right,
know, right. You know, there's
right.
some failures in there, but right.
Right. So at 5 grams per ton, I just doing the math in my head.
It's not worth it.
I don't think it's
not worth it.
I don't think it's I don't think anybody's gonna mine those tailings until north of $50 silver.
Well, this is the point, right? So you're making my point, and when we're in agreement here. All I'm trying to do is just give a different perspective. I'm not trying to sell anybody on anything. Okay,
It's a good one.
right? So so at some price, right? There is a fuckload of silver out there. Because
right,
so even watch this. So in copper, you know, when we're making copper in Congo, okay, and Zambia and stuff like that, right? When you make the copper, while you're making the copper into a concentrate, which is kind of like a dirt powder kind of thing, a 45% concentrate, okay, there's silver in there and gold.
Yeah,
and you get paid on it. But it's chicken shit little, you know, it's just kind of trace, you know what I'm saying? It's not
right. Yeah, you've made your point.
Right. Good.
There's tailings tailings all over the world, and all over the world, and especially in Africa. We have copper producers in South America and Australia and the US. We have tailings all over the place, but it's not going to be economic for a while. And my thought is that once you get to $50 silver, it's not going to take very long to get to 100. But And so nobody's going to really have the opportunity to basically create this, this large influx of silver into the market to lower the price until silver has its chance, its opportunity. But once silver gets at a certain point, you're absolutely right. Once it gets at a certain point, $80, $90, $100, and stays there, you're going to have this influx of silver. You make a good point, but it's not going to prevent $70 silver.
Right, but
how hard is it to change your mind to also start doing silver? And obviously there's the jewel cost of extracting it, and that's going to be crude prices, etc. But is it really tough to change your copper mine and also start getting silver?
Well, but so there's a couple of things, right? Additional considerations, right? So the first thing is the most expensive part of processing, right? There's mining, right, where you pull the stuff out of the ground, and then there's processing, where you extract it from the rock, right? That's crushing and so on and so forth, right? So the most expensive part is crushing. That's where all the money goes, is in the crushing, because you got to crush it once, 2, 3 times, and all kinds of crazy shit, depending on, and every mine's different. Okay, so right, so the material that we're talking about, the majority of the cost has already been incurred, because it's been crushed and is now a tailing to the primary metal, right? So from a cost perspective, okay, it makes it a hell of a lot simpler to just take, excavators and dump trucks and move the stuff from your tailings dam into a leach pad, and within 2 or 3 weeks. So the barrier to entry versus a quote unquote silver mine, which I think there may only be about 10 of them, I think, that I know of, in the world, pure silver mines. It's a different story, right? So now the other thing is this, Don, which is one of the things I tried explaining on that last space, which it got very convoluted and stuff, and I don't think we were able to. There are 60% of the metal in the world, whether it's copper, cobalt, nickel, gold, silver, doesn't matter, goes through Switzerland, right? And there are commodities trading houses, right? If everyone just goes to Google right now and Google's Trafigura, TRAFIGURA.com, Trafigura, should be .com, right? They're the Goldman Sachs of the, commodities trading firm. Glencore's got a desk, First Quantum's got a desk, Rio's got a desk. They all have desks, but these guys are the white shoe, Swiss, right? Okay. If silver bounces to $40, metals from every mine in the world, right? So all they have to do is call the mines and say, hey, I'm going to prepay you right now in advance for, 20 million ounces of silver. Turn your machines on. I'll pick it up in 6 weeks. And what they do is they go into the market and they short against it. So it's not exactly a linear equation in terms of price going up, production starting. These guys are fucking very, very sophisticated. Okay, I've been doing business with them for 15 years. A bunch of them, not just a bunch.
Yeah, you're getting into alchemy at this point.
Well, but I'm just saying it's not a, across the it's not a binary event. Once they see the market starting to pick up for demand for the product, it doesn't matter any one of them. We could be talking about any one of them right now. The silver, we're just talking about silver because that seems to be what everyone wants to talk about. It could be copper, it could be anything. Look at what they did with nickel. Look at what they did back in the first quarter of 2022. They did it with all of them, right? And then the LME canceled the trades, and Elliott and Associates and Trafigura, and they all took this, that, the other.
I was in that.
It was across the board with all of them.
I
Anyhow, I don't want to sidetrack you. I'm just saying there are different facets
Yeah,
to
you
this.
may.
Go ahead. Sorry, Don.
Yeah,
Sorry.
yeah, yeah. I appreciate your call. You made some really good points, and I think we should move on.
All right, very good. Nick, you had your hand up earlier. If you want to follow up anything, go ahead, and then I've got some questions for Don.
Sure. I mean, Ace is very well said. I guess my follow up was, what's the delta between like the change in silver price and the miner? So if silver were to double, the miners obviously would more than double, but by how much? Like, what's? I guess it depends their exposure to silver and what.
Yeah, it's impossible to know because we don't know what the multiples are going to be. We don't know. For instance, most of the silver miners are in Mexico, and will they get the same multiples that some of the other companies get in better locations, which could kind of slow down the returns of our silver investments. So we just don't know. We won't know until it plays out. But I do think it's at least 2x. I'd be surprised if it's not at least 2x, but I think it could be 3x.
And this is just a reference point here, but for example, in the last major low, that was the COVID low, right? Silver rallied 156%, at which point companies like Hecla, for example, went up 565%. So, and that, for your big names, that was pretty consistent across the board. So
right. His delta was between gold and silver, right? I thought.
No, I meant silver and the miners.
Oh, silver and then your upside in miners. Oh, I thought you were comparing. Okay.
I might be misusing Greeks. My apologies.
It's all right. Let's see. Yeah, so he gave you a really good answer there. So he's basically saying about 3x.
And that extrapolates to what Don said at the beginning. I don't know if you were here, but he's talking about a lot of 10 baggers at $50 silver. Well, that's essentially double from where we were, which was a 5.5 bagger. So
yeah,
right. So 5x.
Yeah, I like that. I also like the idea of calls on the miners, which is
well,
even more crazy.
I have I have another point
leverage.
to make on this delta, right? If silver goes up, what do the miners do? The one thing that really intrigues me for gold and silver mining investing is the multiples tend to increase as the margins increase. And we don't know. Let's just use Newmont as an example, since I mentioned that earlier, that they're currently valued at an 18 multiple. And I think that the margins are going to blow out as their margins blow out. So you get basically this double. It's almost an exponential increase in the value of the company, because they're going to be valued at their cash flow. So you take their free cash flow, right, and then we give it a multiple. So they're going to as their free cash flow increases, then that's going to increase the value of the company. And then the multiple, you basically call it multiple expansion, right? In regular stocks, we call it PE multiple expansion. But in the miners, I don't care about P's. I care about, what they're, because one thing about miners, they're always bought and sold, right? So it's like, I value them on their free cash flow multiple. And so the multiple expansion, I don't think it'll double the 36, but it'll come close. So we're going to get, so in other words, even though, Hecla had this initial run, it went up basically 3x, a little more than 3x, right? They didn't even have an opportunity for multiple expansion. That was just based on the price of silver alone. So we're going to get even better returns. And I heard about this when I first started investing in this, that basically you could expect juniors, which usually you never get a 30 multiple on a junior. But I heard about this kind of early on, and it was always stuck with me, that we're going to see when you get manias, like if you go back to the 1980s, we were seeing multiples in juniors of 30, 40, and 50. So, so if we get multiples of that in juniors, we could see, some of these majors in mid
Multiples of
tiers,
what?
juniors, 30s, 40s, and 50s, and back in 1980.
But
1980.
multiple of what? You said free cash flow?
Free cash flow. Yeah, free cash flow. Just crazy valuations where companies were basically going from, $1 to, a share to $300 a share. Just insanity, basically. And so when this thing really finally does go crazy, when gold basically goes to 28, 29, $3,000, and maybe 3,500, we could be seeing some crazy multiples. Basically, you go back to the 1990s with some of the multiples that they had on the tech stocks, where you're seeing multiples in the hundreds. We could see stuff like that. When you get a mania phase, you get craziness. And so my valuations are based on normalcy. I'm valuing Newmont at an 18 multiple, and they value based on their free cash flow. If costs don't go nuts, they have an upside of 4.5. Well, what if multiples on Newmont go to 35? It's almost a 10 bagger, which is craziness. But that's kind of what we could see.
Sounds about right. With my experience, SLV versus First Majestic, it's like 1% versus 4 or 5 on First Majestic on the similar day.
There you go.
All right. And as a friendly reminder, if there's anyone listening that wants to chime in, ask a question, feel free to request to speak or raise your hand. We'll get you up, get you involved. Don, I got one for you. You had posted, let's see, when was this? Yesterday. All right. And you said what you've learned from buying precious metals miners in 20 years is it's not the time to wait on the sidelines waiting for better entry prices. You can't pick bottoms, but you can anticipate them. When your gut tells you you're close, start chipping in. Well, I'm going to be completely honest for the room, for the sake of health and growing and understanding, and I'm going to make a confession. So I asked you about this company last time. I asked you about it the time before. I'm holding a bag, Don, all right? And I'm at the point where I'm trying to figure out if I'm Rick Rule or Rick Fool, all right? It's Liberty Gold.
And I didn't say good things, did I?
And I've never sold it. I've held it, all right?
All right.
And it's down pretty low.
What
And
do you remember what I said?
Yeah, it wasn't your favorite.
Yeah.
But I held it, and I still have it.
Well,
right?
I have good news for you. I have good news.
Well, praise God.
How much are you down?
I'd have to log it in it's pretty far. It's probably 60, 70%.
Okay. Double down on it. Add 50%. Don't add 100%. Don't double down. I'm sorry. Add 50%.
Okay.
And you will make your money back. The reason why is because it's actually since the last time we talked, it's actually improved a little bit.
Mm-hmm.
Now, if you remember what I said about the company was the reason why I didn't own it and the reason why I was a little down on it is because they weren't giving guidance. And guidance is one of my boxes that I have to check for a development story. And they've just been drilling, drill. And that doesn't get me excited. I want a company that sees the end line, sees the finish line, and says, oh, wow, if we build a mine and we start producing gold, we're going to make some money. Gold being produced is worth $200 to $300 an ounce for basically a junior. For a major, it's worth $400, $500, $600 an ounce. So getting that gold out of the ground is what you want to do. And so Liberty Gold hasn't shown an inclination for that. However, they do have 2 really good projects. And so those 2 projects are going to be worth something. Now you're down 60, 70% because everybody's down 60, 70%. The good news is they're kind of come back and this company's not going to sell cheap. You're going to make your money. This is actually a very easy call here. You're down 70, add 50%, and you will actually be getting a lot of basically shares very cheap now. So you're probably going to make more money by adding shares, and adding 50% more shares is basically what's going to happen. If you add 50% of shares, you're going to be back to even once they're up about 100%, which is nothing, 150%, and you'll be back to even. Because it's going to lower your cost basis down to 50%.
Hey, Don, quick question based on what you just said.
Yeah.
Right. So I'm a producer, right? So I don't
Okay.
drill holes in the ground and fly around with PowerPoints and ask people for money. I make the stuff. Okay. And I'm talking to one to two CEOs a week, who are junior miners, and they're all very, very frustrated. You know, that there's no access to capital. There haven't been any meaningful exits, you know, to the majors, you know, the Australian, you know, buy-ins and all these different stories out there. And a lot of them actually are asking me how they could actually start to make gold, you know, gold in this particular, I'm in Guyana right now, right? So good gold,
Exactly.
right. So they want to start producing because, you know, some of them, you know, they need to only, you know, they only need to raise $1 million or $2 million bucks.
Yes.
I'm like, shit, you know, you could make $3, $4, $5 million in top line, just letting me work with my company, you know, as kind of like an outsourced kind of contractor kind of thing. You know, I'm talking to a bunch of guys. and you know, so my question, right? What's my goddamn question? So my question is it concern you that we haven't seen any of these buyouts in a while? You know, like look, I'm in Guyana, right? So look at Reunion Gold. Reunion Gold may be one of the best stories in the Canadian exchange today. They're just absolutely fucking killing it, right? I'm a shareholder.
Right.
And so are all my friends who are not on Twitter, off Twitter. I've never told anyone to buy the goddamn stock, so don't go there. So, you know, but at some point, don't these, you know, like, you know, what's going to break the logjam? I mean, there haven't been any of these, you know, like exploration exits that I've seen. Do you have any insight on that? Thank you.
Yeah, absolutely. So what's going to break the logjam is higher prices. Right around, I think, $2,100, $2,200 gold. I think the M&A kind of goes nuts. And I think the bankers kind of loosen up and start, you know, giving these companies some money, and money will start flowing in. But M&A, once we get above 2,100, I expect a lot of M&A because there's so many companies that are just so cheap right now. So it's opportunity city for a lot of people. But what you said earlier about these CEOs want to produce gold, yeah, absolutely. I'm seeing this more and more where companies realize that if they try to sell their gold in the ground today, they have to sell it for less than it costs to find. So it costs about $50 to $75 an ounce to find gold, and you can't sell it for that. So right now you don't have a choice. But if you can produce it, the value of your company can really explode. All you have to do is generate some free cash flow and improve your balance sheet, and you can create a lot of value for your shareholders. So I'm hoping that more companies kind of go down that path. But as far as money flowing into the sector, I don't think that's going to happen until we get above $2,000 gold, and especially like above 2,100. But 2,300, I think we're going to see M&A just go absolutely bonkers, because all these companies, it's going to be, you know, their last chance really to buy some companies really cheap, to buy some gold in the ground. Because right now, I did an optionality list, and I have I think about 60, 65 companies on my optionality list, and they're all valued under $20 an ounce for silver. They're currently valued at that, and I mean gold. So $20 an ounce in the ground or less to make my list, and then for silver it's $1 or less in the ground. So we have a lot of these companies that are valued at $10 an ounce or less for gold in the ground, which is how can you sell? You can't sell your company. So you're just dead. You're just waiting for the market to change. Like you said, these CEOs are frustrated because they're valued below cost. What you can't sell for below cost. So what can you do? you can drill a little bit and just kind of hang around. And there's companies that are doing that today. And but I think the whole thing will flip. The gold sector, in my opinion, you mentioned you thought, you know, $18, $25 gold wasn't terrible, and it isn't. But the prices of the cost have really went up. $1,800 gold, you know, before COVID was fabulous. You know, the average, you know, all-in cost was probably around, below 1,400, and today it's you know, it's probably 1,600. So the margins are only about $200, which isn't very good. You need to get above $2,000 gold really for the gold market, the gold sector to be healthy, and you need to get above 30 for the silver market to be healthy. So neither market is healthy. 1825 isn't healthy, really. I mean, for some companies, I mean, you know, the Orlas of the world who have low cost, but Dundee's. But most of the companies, I mean, you look at Newmont and Barrick, I mean, you know, their costs have really, really risen. And so, you know, a lot of these gold miners, the margins are not that great at $1,800 gold.
They're terrible. I mean, but if you look at the private miners versus the public miners, which is 95% of the mining companies are private.
All right.
Right? Like,
right.
I don't know. I mean, you know, like,
you're doing okay. Your margins are okay.
Well, because we don't have the AISC, the gap.
Right.
What is it? All in sustaining costs or something? AISC, ASISC?
Yes.
We don't have that, right? We don't have the cost of acquisition. We don't have all the amortization. We don't. We're just like Jewish guys in, you know, the lower east.
You wouldn't. Right. Also, also you don't produce a lot, so you need to have big margins.
Right. That's the other thing. You know, we're small producers, less than 1,000 ounces a month kind of thing, you know?
Yeah.
Right. So, no, you got it, right? So once you get into that public story there, and, you know, Gap and FASB and Jorks and all that other bullshit, you know, your costs skyrocket, right? So, but that's good, right, for the public investor, because maybe not in the equities at the moment, but in the metals, because, you know, the cure for low prices in commodities is low prices, right? So, you know, the good guys just start shutting stuff down. So anyhow, I don't want to take the call here, but yeah, anyhow, thank you for your input.
Sure.
Okay, we're 2 hours, 15 minutes in. We'll start working our way towards last calls here. If anybody wants to come up and talk to Don, consider this your last opportunity. And then I've got a couple of more questions for you as we wait and see if we've got any more. Let's talk about oil. It's something we always talk about. Are you in the runaway oil prices camp?
No, I'm expecting. Yeah, I really enjoy oil as you know, as a subject, if you will. I'm in the camp that oil is going to go down here. So I think it's going to, when the recession starts, which I think it is going to start here, I'm expecting oil to go down in the low 70s, maybe 60s. I'm not expecting 50s, but I'm definitely expecting low 70s, and maybe 60s. 60s is a possibility to overshoot, but definitely low 70s when the recession starts. And we saw it. I mean, it was almost. It was in the 80s, 90s, I think, and it just boom down in the low 80s in a heartbeat. I think the same thing will happen. It'll go in the low 70s in a heartbeat. But I do believe that there's not enough exportable oil. So that the key to the oil market is how much oil is available for importing. You know, the import-export business for oil, to me, is they talk about, you know, global production is 100 barrels per day. To me, that's meaningless. What's important is the availability of oil on the market you need to import in. And so that is the key. So how many exporters are there, and what is the export market? Now, the U.S., I think, is starting to hit a wall here with shale. And so we're going to actually be importing more oil. And so there's nobody else in the world that's making more producing more oil to offset the decline rate. So the decline rate, 10 years ago, the decline rate was 5%. Today it's 10, which is insane. And one of the reasons why it's 10 is because the shale oil is declining much faster than the regular oil. But the decline rate is 10. So that means that every year you have to find a new Saudi Arabia. So we're at 100 million barrels a day production, and you lose 10, you got to find 10 more, which is basically Saudi Arabia. Well, the thing that's nasty about that is you need enough exportable oil to basically provide the needs for the world. And so what fixes that? The only thing that fixes it is price. And so if you don't have enough oil, then the only people that can pay the most can get oil. But if you can't pay it, then you can't get it. And so for me, I really believe that in 2025, the decline rate exceeds the availability of exportable oil. So in other words, basically you're talking peak exporting. There's just not going to be additional exportable oil. So peak export, let's call it peak exportable oil, is going to be reached in 2025. I think we have 12 months left of basically affordable energy. And sometime in 2025, I expect oil to go well over $100. So the near term, we go down, let's call it $70 oil. We go down to 70 between, say, now and the end of January, probably before the end of this year, though. But we'll just call it the end of January. Then I think oil will stay low through the first quarter. And so we get into the first quarter next year, and I think we'll still be below 80. But sometime in the second or third quarter of next year, I think we start to trend up. And that trend up is going to be nasty, because I think that trend up takes us all the way to 135, 150, 175 oil over the next 36 months. It's going to be nasty, because once it starts, it's like kind of like game over. We're not coming back down. And it's because there's not going to be anybody adding production, if you will. There's no projects in the pipeline to offset that 10% decline rate. We're headed to an energy crisis, bottom line. And energy, and SR Rocco and I, we did one of these spaces. It was great, and he basically, really showed everybody how screwed we are, if you will. There's not going to be enough new projects, new oil coming online starting in 2025 to basically prevent, very, very high oil prices. Once we get the next time we get above $100 oil, I don't think we're ever going to go below it. I don't know if we're going to get to $200 oil, but I think 150 we're definitely coming, and there's just nothing to really prevent it. That's the bad news. So the U.S. economy is basically going to start slowing next year, and then the high energy prices are going to kick in, and that's going to drive energy prices up, and it's going to drive food prices up, which is another, kind of nastiness that's coming. And then once you get to 2026, 2027, that energy crisis isn't going away. So then what's going to happen? That's when society is basically going to start kind of reorganizing itself, if you will. It's going to be dramatic. I write about it in my book, The Path Forward. But we are literally in the final innings of basically what I call, this era. This era is basically coming to an end, and it's going to be somewhat shocking to people, because the path forward, where we're going is not where we're at right now. We're going to reorganize society.
Hey, Don, I'm just curious. Is there a distinction in your model, in your mind, between oil, gasoline, and diesel? I was paying about $3.70 a gallon for 18 months straight here in Guyana. And then all of a sudden in August, there was no diesel for 3 weeks. Zero, not one drum.
Well, that's coming. It's going to get worse.
And then the diesel came in September, and huge price increase. Right.
It's coming.
So when you're talking about oil, are we also talking about gas and diesel, or is there a distinction there?
Yeah. No difference. No distinction at all. That's exactly what I'm talking about. When I say oil, I'm talking about gasoline and diesel. And you just saw the beginning. You just saw the beginning of what's coming. The next price increase, it'll just keep going higher and higher and higher. You have about 12 months left of this type of diesel, affordable diesel, if you will. And after about 12 months from now, I don't. We're not going to have affordable gasoline, affordable diesel. It's going to be. We're going to go over $10 a gallon in California for gasoline.
Now,
That's what's coming.
how are you factoring that into your model? Because diesel is my single biggest expense. Are you factoring that into your model for the mining equities? Because
great question.
Could be weighing on them, you know?
Great question. So this is really, really strange, right? So I've been doing this. I've been buying junior since 2004. So it's always coming on 20 years. And I'm not going to buy another mining stock once the HUI gets above 250. What I'm going to do is I'm going to pivot, because I believe that once we get above 250, the next run has begun, and the next run is going to take us from the HUI 250 to the HUI over 1,000. And so I'm pivoting. Once we get above HUI 250, 250 has always been my neutral level. Once we get above 250, I'm pivoting into my exit strategy. And I might not ever buy another mining stock again, exactly for what Three Aces is talking about, because everything's going to get bizarre. We're going to have high costs are going to go up for the miners. You're going to have higher royalty taxes. So we're going to get this one little opportunity to basically sell to the top and take and basically get as much profit as we can before this thing, our margins get squeezed because of high diesel prices. I don't think diesel prices are going to go nuts for about 24 months. And I'm hoping that gold can make a run to 3,000 before these diesel prices kick into gear. But you're absolutely right. That's why I put it in my model. So I'm selling to the top here. I've always believed that this gold opportunity is a once in a lifetime thing. This next run, gold has never made an all-time high and then kept running. It made an all-time high in 1980 and crashed. Made an all-time high in 2011 and crashed. Made an all-time high in 2020, crashed. It's never done it, but this time it's going to.
Don, are you factoring in real yields, which is the break even minus the treasury minus the break even, not CPI? Because real yields have just been absolutely skyrocketing.
Yeah, people, so I get into this all the time on Twitter. In my opinion, the fear trade, and if you were here earlier on this spaces, I talked about how the fear trade is going to really explode, if you will. Once the fear trade ignites and really takes off, people won't care about real rates for gold anymore. They won't care about the dollar. They won't care about anything. They'll just care about getting their hands on gold. The only thing that will matter is basically the fear trade and people running from stocks and bonds and into gold. Now, I see Deborah has been online from Melbourne. Hi, Deborah. And Deborah knows exactly what I'm talking about here. People are going to be running to gold and stocks and gold and physical gold. And nobody's going to care about what the real rates are.
All right, very good. That was a pretty good run there, Don. Jabroni's up. What you got, buddy?
Howdy, guys. I just jumped in. I was kind of trying to just catch up. It sounds like you guys are just talking about the overall macro, right? Is that for the most part?
Anything you want to talk about?
Oh, well, I've been saying, dude, like I've been kind of going off a little bit and, working a lot. So, we don't really get into the miners as much. I've kind of gone dormant for the most part, but I know you're very on all this. But, it's just funny. Like I'm in lending, I'm in commercial lending mostly, but I work for a big bank, top 25 in the US. And just what I see with other people lending and what the requirements have changed just in the last 6 months. I'm not surprised that some of these mining company executives are struggling. And I'm like, honestly, I can't feel bad. There's a lot of hubris in the sector. And I mean, Don, I'm sure you've gone to a lot of these functions, talk to mining companies on your own. And I mean, I've gone to my fair number in the last 2 years or so of like conventions and things on my own dime to do some, meetings with mining companies. And it was just very much from a sales and finance perspective, an eye opener. So I've gotten very jaded in general to the sector. I've pulled quite a few chips off the board. I have a few that are like residual, but I'm actually in this like situation personally, and I'm not going to just talk about myself for too long, but now my bank is so big through mergers, I can't actually trade. They restrict my trading. So my positions, some of them are like kind of frozen. And, I'm very limited in what I can invest in and out of now. And I have some mining companies that I'm not sure why they haven't told me, but I'm actually stuck in. So they're bigger plays like AG. I've been, following people on here that I trust, respect, like yourself. But, I'm in it still, but I'm kind of locked in it because if I trade out, even if I just leave, like liquidate my positions, I could be like fired. That's how stringent our financial, trading, insider trading laws or whatever are. And so I'm just kind of like watching what you're saying. I'm like, I hope you're right, because otherwise I'm in a world of hurt, like it's kind of funny. But, what would you say to people who've just been like, just burned out? They're like done, because I don't even think I have a fair amount of insight into the last like 5 years or so with this, but I mean, man, it's brutal. And the management teams don't do themselves any favors.
Yeah, I have a few thoughts on that. First of all, about the burnout, it is, you have to be a believer, if you will, to be NPM miners. I mean, we basically have been in a downturn since 2013. In 2012, we headed down, but 2013 was like kind of a doomsday type of scenario when gold just basically crashed, and we really have never really climbed out of it. We had a bit of a run in 2016, and we had a nice run in 2020, but it didn't last. 3-month run, but by and large, it's been just brutal for 10 years. That is a long time, right? So it's easy. It's pretty easy to be burnt out. Like, what the point? But if you're not, like me, who's just kind of a true believer, if you will, what you can do is, I know you basically said you're kind of stuck. You can't really trade. But for other people that are kind of burnt out, if you will, is that don't miss the run that's coming. Yeah, be patient but wait. Just know that the odds of a run are coming, and this is what you can look for. Number one, look for an all-time high in gold, right? Because one thing we know is that whenever you break out technically in a chart, you get follow through. So if you go above 2100 this time, there's a really good chance we're going to get some significant follow through to say $2,200, $2,300 gold. There's that. So, I mean, one of the things you can do is you can kind of jump in and at 2100, jump in at the all-time high. Then the other one is silver. If silver hasn't been above $30 since 2011, it got close a couple times, 29s, but it never get there. So when it finally does get above 30, the odds are really good that the follow through is all the way to 50. So you don't want to miss that run from 30 to 50. So even if you're burnt out, just have a position from that for those upcoming runs, because the odds are just such in our favor that if we get the follow through. Now, the other thing I want to talk about is the being jaded. Absolutely. I mean, remember I said this is going to be the last mining stock I ever, we'll get above 250, I'm never going to buy a mining stock again. Well, part of my jadedness is, this business, there's just so many negatives, right? I mean, one of the negative is, international investing, third world countries, they don't want you there. You run into trouble, permit problems, shut down mines. But the other one is, the management teams. They basically run their companies. They want to raise money from us, from the retail crowd, right? I mean, I'll give you one example. I can give you a few. Maybe I'll give you at least two here. But the first one I'm going to give you is Bonterra, right? So Bonterra is developing a really, really solid project in Canada. I mean, they're making progress. They've been working on this thing for 5+ years, and they every year they go back and they get money from the retail side, right? And now their stock crashes, and they sell at the bottom for a 30% premium. So everybody that owns Bonterra basically, we're losing. Oh, we're going to give you a 30% premium. Well, in actuality, they're stealing our money, right? They're giving it away because they gave away 70% of the company to Osisko Mining, and Osisko Mining only had to pay, I think, $5 million in cash, and then that was it. It's like you get 70% of the company for $5 million in cash. I mean, those are the kind of deals that happen all over the time.
Hey,
where we,
Don,
yeah,
yeah, just to put a little cherry on the cake there that you're baking right now.
yeah,
I have been inside of maybe a dozen junior miners in the past couple 2-3 years, wanting to do deals, this and that, and all this other shit. I have never in my life seen a group of companies put together so poorly. These things are fucking thrown together. It's like unbelievable. So some of the CEOs have never even been to the countries where the goddamn assets are. Right?
yeah.
I mean,
So
it's like, so
right.
just to kind of accentuate what you were saying there, be careful, man. Be careful.
Yeah. Well, yeah. And my point was that, I mean, this is a company that has been, advancing this project for 5 years and making a lot of progress. But I see this, and they had insiders. They had 30% insiders. It's like, what? Why are these insiders giving away their company? But I see this. So development plays are just so risky because they generally sell before they get into production, and they generally sell, after they basically take all our retail money to develop these things, and they sell them at a lousy price. But so it's a very difficult industry to make money on, if you will. And then you have a lot, like 3Asia just said, you have a lot of management teams that are kind of iffy. So for me, I really like it when I find really solid management teams. I want to list about 5 or 10 of them right now, but I'm not going to do it because maybe one of them will disappoint me. But there are several teams that I do like. But then there's a lot of teams that I think are iffy, right? And it's like, can they build a big company? Do they have, the vision to do it? Do they, for me, most of these companies, they don't have the right vision on how to really manage these companies correctly. I see it all the time. In my opinion, and that's one of the reasons I'm kind of jaded, investing in this, because I see some of the better ones, and I just think they're doing it wrong. In my opinion, the best way to do it, and I talked to this one company. I said, I really love your strategy. It was actually West Gold in Beaver Creek. I was telling the CEO, I was going, I really like your strategy of having being cash focused. So West Gold basically has, like, I think $90 million in cash or more on their balance sheet and have no debt. That's the way to do it. If you're a mid-tier, you want to have cash on your balance sheet with no debt. And then if you borrow money, you pay it off real quick. And I was giving First Majestic a bad time. And they were basically defending themselves, basically saying, well, but our interest payments are low. I don't care if your interest payments are low. You still have debt on your balance sheet. It's still a risk. Get rid of it. In majors as well. I loved Kirkland Lake. They had $700 million in cash on their balance sheet. They had no debt. And their multiple is 27, I think, at one time. And like, why doesn't everybody get with the program? If you're a mining company, it's a cash business. If it's a cash business, then have a strong balance sheet. It's basically it's going to protect you in so many different ways. It protects you from getting acquired because you're going to be highly valuable. Somebody's going to have to pay through the nose to buy you. But then somebody, they did sell out. Kirkland Lake still sold out to Agnico Eagle. Still makes me mad to this day. They didn't need to do that. They could have become Agnico Eagle. That just frustrates me. But these companies need to be cash focused, and they're not, and that really frustrates me. It makes me jaded. Go ahead.
Hey, Don, do you have a geographical preference? Because when I look at the Australian, for anybody who doesn't know, Perth, Australia is the Silicon Valley, Hollywood of the mining industry. Okay. So I've been to Perth many, many, many times. And so the companies in Australia, my God, seem to be trading at pennies on the dollar, and they have revenues and cash flow and all kinds of shit compared to these Canadian ones. Do you have an opinion about that? Thank you.
I have been trying to educate people on Twitter and on my website that these Australian companies, and Deborah is on the line still, I think, yeah, that these Australian miners are going to be worth a fortune. They're going to have huge premiums because of the location, the lack of the location risk. Mining in Australia is like farming in the U.S. I mean, that's what they do there. I mean, Western Australia is like one big mine. And they tend to have very good teams. They've been doing this forever. And I think a lot of I like Canadian miners as well. I want to own as many mid-tiers in Canada and Australia as I can get my hands on. And during this downturn, I've just been hoping that I could buy all of them. But you said they're cheap, but I disagree. A lot of them are too pricey for me because I want a 5-bagger. I don't really want to buy these companies that are 2 or 3 baggers. Even now, even with the sell-off, I just think like Gold Road. I mean, it's just too pricey for me. Capricorn's too pricey. Bellevue too pricey. De Grey, too pricey. So I owned De Grey. I had a 10-bagger and I sold it because I didn't realize how big it was. But it took off, and I'm like, wow, this thing's just overpriced. I get it, like right now, I think you should sell Reunion. I mean, that thing's overpriced now. I think some of these companies they take off, they get too pricey, and
overpriced here, Don. After
I think Reunion. I think Reunion's overpriced right now. I do.
Really?
Yeah. I would rotate it. If I rotated De Grey. I wish I wouldn't have.
I took some off because it started to trade like crap. And then all of a sudden, 4 or 5 days later, they announced the financing.
Yeah.
So I'm still stuck with some of it,
All right. So getting back to my partial, absolutely. I mean, I like Brazil a lot. I like Guyana and South America. I think those 2 countries, they're the only ones really in Central and South America that I like. But I like Guyana. You're in Guyana, aren't you?
I am in Guyana.
Yeah. I like Guyana a lot. I think you do too. I like Brazil, and I like Brazil. Those are the 2 countries that I really like. And then there really isn't a lot of places. I like Namibia. I can't pronounce it. Namibia. Masina's down there. I like that country. I think they're a mining friendly country. Cody. I'm okay with Cody, and I'm okay with Guyana. So you got 3 countries in Africa. You got 2 countries in South America and Central America. Ireland, I'm okay with Ireland. I'm okay with the Scandinavian countries. Spain and Portugal, I'm iffy on. I'm kind of okay with those 2. But by and large, it is difficult to find mining safe locations.
So for me, Don, because, when I live in the countries I work in, right? I've lived outside of the United States since 2009. So, I'm not a passive investor. I'm an owner operator. So for me, the most important thing, right, is the provenance of the country, right? So if you look at South America, for example, Guyana, where I'm sitting right now in Port Kaituma, where for any of the history buffs out there, where the Jonestown massacre was, sitting about a mile from the airstrip, is the only English-speaking country in South America, right? And then you partition them off, right? So then you start to look at, I'm literally right on the border of Venezuela, right? So if you start to look at the west from Guyana, you get into the Bolivarian, right, countries, the governments. So the roots of the governments and the imperialism and all that shit. And I can write a book on this, but let's not go there right now. But so like in Africa and these places, the countries that have the British rule of law to where they left behind when they got independence are the best countries to do business in. And Guyana is the best country. I've been to 100 countries. I've owned companies in, the number of countries like we talked about. But I've never been in a country better anywhere in the world than Guyana.
Nice.
And so you shouldn't be afraid here. And it's the fastest growing GDP in the world.
Nice.
And it's the fastest.
They should, if they want people to move there, they should adopt Bitcoin. That place will just take off. Hey, we haven't talked about Bitcoin.
It's the kind of country that would do that, because
I hope they do.
Such a free country here.
Yeah, that would be awesome.
You go into any government building, any the geology and mines and Ministry of Natural Resources or the Revenue Authority, any of these buildings. Hi, honey, how can we help you? Here, they sit down, they do everything for you. You just sign a goddamn form, pay $5 and get out of there.
I guarantee you, El Salvador is not going to be the last country to make it legal tender. Who's got a Bitcoin question?
I don't have a Bitcoin question. We can certainly talk about it. Jabroni, you got your hand up. You want to get in real quick before we do that?
Yeah, I got to dip out very shortly. I appreciate you guys putting up with me. I just had a quick question. If you had to choose between First Majestic and like down, or I guess up the risk curve, what would you say like for a longer term, like, I don't know, a couple year play would be? Or is it even going to be something you guys, like, Don, do you think this is going to be like a year out or 3 years before we see some movement? This is obviously just your opinion, but like, what is your forecast? And I appreciate you guys.
Yeah, so I have a lot of development stories that are going to take 3, 4, 5 years to unfold. But I'm hoping that gold goes up to, say, next year, 23 to 2,500. That'd be 2024. And then 25 is we get to 3,000. So I'm hoping that gold and silver basically make their big moves over the next 24 months, which is kind of soon, if you will. So First Majestic is going to participate in that 2-year run, right? But some of these other plays won't, like Go Gold and Discovery. They still got to build. Go Gold's got to build 2 mines. Discovery's got to build the big mine. That's just 2 examples. But I have a lot of these development plays. They're going to take a while. Like Eris has to build 3 mines. So my thought was, I still hold all of these plays. My thought is, I'll hold on to the ones that are still building. They still have, but I'll sell the rest. I'll sell the First Majestics and, the Silvercrest, the Silver Corps, the ones that are producing that aren't really building big mines. And then the ones that are building them, like Endeavor's got to build 2 mines. It's going to take them a while. Avino. So I'll be holding on to these plays, praying, if you will, that the gold and silver price holds on. So that's kind of my plan. So I'll probably be out, in the next 24 months, I'll probably have sold half of my miners, maybe a little more, and then I'll hold on for dear life and pray that some of these development stories, keep going higher. They don't come back down. So that's kind of how I look at it. You didn't give me basically a comparison to First Majestic. You just said longer term plays. So I would throw kind of Go Gold and Discovery in there.
Yeah, no, I appreciate it, man. Like I said, I didn't really want to throw any specific names out there. I've gotten most out of Dodge on like the kind of mid levels, but I guess like Endeavor would be something I think in like First Majestic would be like above, like they're more stable, more established, right?
Right. Yeah. I'm overweight producers. I think I'm going to make most of my money in producers, just because, the quality producers, because they're going to participate, because their free cash flow is going to go up Whereas a drill story, sorry, if you don't have new drill holes, you're not going up. If you don't have gold or silver in the ground, you're not going up. So people that are playing these drill stories, they're going to miss this run really, unless they're whichever exploration play they're in is basically getting bigger. So one thing you want to do, you're doing this right. I mean, quality for me, quality is really important. You got to own a lot of quality. And when I say quality, I'm really talking about producers, right? And so, because those quality is what people are going to want to go. That's what they're going to buy. Those are the ones that are going to have bigger multiples. Like people are buying Apple, they're buying Apple because of quality. The big seven, the quality. So you want to own a lot of quality. You want to own companies that are going to participate. Make sure you own companies that are going to participate. One easy way to participate is the ETFs, right? GDXJ and SILJ, they're going to participate. That's an easy way to participate. So,
What
good
would you
question.
say?
Hey Don, do you know Ivanhoe Mines?
Yeah, I'm not. Yeah,
in Congo, Democratic Republic of Congo.
Yeah, Robert
Do you know
Friedland.
that stock IVN on the Toronto?
Yeah, Robert Friedland's big play. Yeah, they're massive.
Friedland. I had a lot of interactions with his people in London for 4 or 5 years. They're probably the smartest guys I've ever have spoken to.
Oh yeah, Friedland's top notch. Yeah, for
sure. Top notch.
Uh-huh.
Now that deposit they have in Congo there, right? I know that deposit. I lived in Congo. Okay?
Well, but I'm not going to touch Ivanhoe because I focus on gold and silver, and he does base metals.
Oh, that's copper. Okay, so you don't do copper. Sorry.
No.
Okay, all right, sorry.
Well, okay. It's 10 till. I've got a wife waiting for me. It's Friday night. So we're going to wrap this baby up here soon and consider this the last call. Don, go ahead.
Wait. Somebody's got to have a Bitcoin question.
Well, that's what I was about to say. If anybody has a Bitcoin question, go for it. I don't think I do. But I'll tell you what. Let me open a chart real fast and see where we're at. What is it now? 28,000? Okay. So what's your expectation if gold hits 3,000? Where's Bitcoin?
North of 50, maybe north of 100, but definitely north of 50. If we go to $3,000 gold, I'm expecting, definitely north of 50, but heading higher. The thing about Bitcoin, which people don't really get, if you will, is that the only reason why Bitcoin exists, the only reason why it survived, is because it's needed, it's necessary. Because the central banks really abuse us with their money printing, with their devaluation, with their inflating, and this is the alternative. This is kind of the hard money option. It was kind of inevitable. It's basically digital money, software money. It's technological money, but it works. I mean, everybody has a phone today, right? And we have a phone right now. I'm still reaching into my wallet, pulling out my credit card. I'm still using my wallet to pay, do my transactions. But in Asia, they don't carry wallets. They don't have them. They don't have credit cards. All they have is their phone. They walk around their phone and they make payments with their phone. And that phone is basically making digital payments. Well, Bitcoin and crypto are perfect for that. And so if you do more research on it, it creates the ability to create what I call a private financial system, which is outside of the banking system. It's an alternative digital, basically, system where you basically trade with tokens. And there's like private money. We've always had private money. They've had private money for more than 100 years. But digital money creates the opportunity for private money, and Bitcoin's the ultimate private money. So again, it's needed. And so if it wasn't needed, it wouldn't be here, and it would fade away. Well, what's going to happen is if you look at where Bitcoin is right now in its history and its life cycle, if you will, is we've had 3 halvings. So we started at 3,600 coins per day. And then we went, and the first halving was 2012, it went to 1,800. And then 2016, it went to 900. And now in 2020, I think we're at 900 now. And then 2024, we go to 225. So what's happening is these halvings are having an impact. And so in the cycle, the next halving is in the springtime of this year. And that halving will have an impact. Whenever there is a halving, you cut supply by 50%. You cut mine supply by 50%. So the daily new Bitcoin that comes on the market gets cut in half, which is a significant amount. And so unless demand shrinks, the price goes up. And so next year, I think this time next year, I think prices will be above 30,000. I think the pressure will be up. But what's going to happen is this is a global phenomenon. So what's happening in El Salvador, I think, will spread to other countries where it'll be basically a legal tender. And if you don't have capital gains on it, so basically Bitcoin is becoming hard money. And there's different ways that can unfold. It's almost like the internet of money, which is, my point is it's not dying. It's going to keep going. It's going to keep expanding. And that's kind of where these other projects come in, like Ethereum.
Right. Don, quick question on the Bitcoin.
Sure.
Right. Okay. I make 100 ounces of gold. All right. I take that gold, I sell it, I get cash.
Right.
I don't ever need to walk into a bank. I could take that cash, buy Caterpillar, buy anything I want in Guyana. It's a cash society. Right? I don't need a bank. Right? Now, I have bank accounts, but I'm just saying, right? Okay. Now, in the case of Bitcoin, if I want to buy $1 million worth of Bitcoin, right? I need a bank. I got to put money in the bank. I got to wire the money to the exchange. I got to buy the Bitcoin. I've bought Bitcoin. I know how to buy Bitcoin. Okay, now, when all the Bitcoin boys are saying, oh, the banks are going out of business, go to Bitcoin, and I say, hey, wait a second, in order for me to buy and sell the goddamn stuff, which I'm a huge fan of, by the way. Right. I need a goddamn bank. So
no,
how do you
don't
reconcile that one? Can you please?
Yeah, you don't. Yeah, you don't need a bank. All you need is cash. So what's coming, if you will, is the ability to basically just move cash, exchange cash for Bitcoin. That's coming. So places like where you're at in Guyana, you'll be able to basically feed your $100 bills into a machine and get Bitcoin back. Might take you a while for 10 grand, but you'll be able to feed cash into a machine and get Bitcoin back. You won't need a bank. And then once you have that Bitcoin, you don't need a bank, because then that Bitcoin you can buy stuff with. If like in El Salvador, if everybody is accepting it, if they're accepting the Bitcoin, and I think that's what's going to happen in a lot of these countries. The other thing, now this is where and this is another one where you don't necessarily need a bank, but if you have Bitcoin, if you have it in a wallet, a Bitcoin wallet, let's say you use cash, converted the cash into Bitcoin, and you have it in a Bitcoin wallet, you can transfer that Bitcoin into a wallet that's online and then use a credit card to spend it. And nobody will know. It'll be a Visa or MasterCard. This is happening already today. This is a new stuff. You can get a Visa or MasterCard that's tied to a Bitcoin account, Bitcoin wallet, and spend that Bitcoin buying anything in the world. And that credit card will never be declined because it does not go through a bank for approval. All it does when it goes through the approval, it just checks to see if there's any Bitcoin in your wallet. If there's Bitcoin in your wallet, it'll go through every time. It's basically the best travel credit card you can use as long as you have Bitcoin in your wallet and the internet's working.
But Don, if I've got some number of Bitcoin, and whatever the hell the number is, okay?
Yeah.
Cold storage. And I want to transact with you.
Yeah.
Can I move it cold storage, my cold storage, to your cold storage, or do I got to go through the goddamn system there?
Yeah. So cold storage to me just means it's not on the internet. But there's two different types of cold storage. One, so you can actually have Bitcoin on Coinbase in cold storage. But if you do that, then you got to wait to get it out of cold storage. But if you have Bitcoin offline on a wallet, a hard wallet that's not on the internet, that's cold storage too. That Bitcoin can be transacted at any moment. All you have to do is connect that Bitcoin to the internet. Basically, I take my wallet.
I've got Bitcoin on 2 cold storage systems right now.
Are they on the internet or are they off the internet?
Completely off the internet.
No, that's not my point. My point is, are they on an exchange or are they on a hardware wallet?
They're on the hardware wallet to where I've got a physical device here.
Right. So you're
CoinKite. You ever heard of CoinKite?
No, I haven't. So it's a hardware wallet. So if it's a hardware wallet, yeah, that your hardware wallet, all you have to, if you could transact, you could send me money, right now.
From the hardware wallet?
Absolutely. Yes,
direct.
Absolutely.
Let's say you did a project for me and it was $100,000.
I
could send you Bitcoin from the hardware.
Yes, wallet. I have. Yes, I have.
I don't need Coinbase or any of that shit because I've all this stuff and I've got it sitting here. I don't know what the fuck to do with it. But I'm just doing it because it seems like the right thing to do. I got a gut feeling about it, right?
Yeah, it's a hardware wallet.
So I'm just wondering how the hell do I use it?
Yeah, right. So which you basically transact through addresses. So let's say that I was going to do coaching for you, for instance. You want to pay me in Bitcoin. All I do is just send you my address, and you basically transact to that address. It's simple. That's simple. There's no intermediary between us. We go wallet to wallet.
I don't need a Coinbase or one of these guys.
No. Absolutely not. When you buy Bitcoin on Coinbase, you immediately take it off. You take it off Coinbase and you put it on your personal wallet, right? You take it off the internet, put it on your hardware wallet. Once it's there, it's no different than having money in a wallet. It's just digital, right?
Do you know Unchained? Do you ever heard of Unchained?
No, I haven't.
VC backed. If you look at Unchained, I got a wallet with them, and then I got a wallet with CoinKite. But I put the Bitcoin there. Somebody taught me how to do that. Well, the Unchained, it's a service. They do it all for you.
Right. Well, the one thing
that's only for U.S. money. You can't do that.
So what you want to do? Okay, so this is what you want to do.
Right.
You want to get a Trezor. You want to get one of the new ones because they have a Model 1 and they have a Model T. And you want to get the latest one, which is 3 times as much more expensive. And the reason why it's more expensive is because nobody can.
I'm sorry to interrupt you. How do you spell that?
Oh, Trezor. Trezor.
Trezor, and that they got a solution there on the website.
Oh, you buy the wallet and they're going to mail it to you, and then you just transfer your crypto into that Trezor. The thing that's beautiful about a Trezor is it can't be hacked.
All you have to do a service that does it for you and all that stuff, or I got to do it myself?
Yeah, you got to do it yourself. It's a hardware wallet. You're going all it is the wallet. You're going to buy the wallet and they're going to mail it to you, and then you're going to transfer your crypto onto the Trezor. Here's the beauty about the Trezor is that once your Bitcoin is on the Trezor, and that Trezor, it cannot be hacked into. Somebody gets their hands on your Trezor, nobody can hack into it and steal your money, basically. But you have to use a pass key. So you have a master key. The master key is it can be 12, 16, 24 words. That's your master key. The master key, and then you have a pass key. So if you have the pass key and the master key to combine, it's impossible to hack into it. But if you don't put a pass key on it and you only have master keys, then it's possible to hack. But once you use the pass key, no one can hack into it. So, and then as long as you have those, you can recreate the wallet. So if you lose the wallet, you can recreate it. You can regenerate the wallet. So what I did is I bought 2, and then I regenerated it to make sure it worked. Make sure the regeneration worked in case I lose the wallet. And of course it worked because Bitcoin, basically the software is pretty amazing. But yeah, so the wallets that you're using are the only wallet. The only wallet
Yeah.
Right.
Go ahead. Sorry.
The only hardware wallet that's basically unhackable, that's basically the cream de la cream, is the Trezor, and it's expensive. It's like $300. You're paying for security, but it's worth it because if you have a lot of Bitcoin, you want to have that security. You don't. So you basically, you can recreate the wallet. So the thing is beautiful about it. You don't even have to travel with your Trezor, right? You can travel to another country and then buy a Trezor in that other country and then recreate it kind of on the fly, if you will, regenerate it.
Is
Okay.
what you're talking about, is there a distinction between various locations? Because in this scenario here that I got with these two stories that I have here, well, I got them in different safes and stuff in different places. Is what you just said have anything to do with that, or what you just said was separate and aside from that?
Well, do some research on hardware wallets. The first thing that you should do, I would start here, is I would do a review on the best wallets. And that's going to give you an overview of what the wallets provide. So do that first. Just go to YouTube and there's a lot of reviews on the best hardware wallets, and do that and see if yours are even on there. So it's going to do a review of all the best hardware wallets. And if yours aren't on there, you're going to go, what the hell? Why aren't my wallets even listed? Right? Do that and then see what they provide. And then once you do that, you'll get an understanding of what these wallets do and what they can't do. Just by going over the reviews, it's going to give you an idea of what they do and what they can't do. Make sense?
Yeah, no, I got it. This Unchained, the one I have is Unchained. That's where the real money is. They're VC backed, Texas. The problem is they're only onshore, and most of my stuff is offshore.
Right. The one thing that's beautiful about Bitcoin is all Bitcoin is a ledger with addresses. So transferring money around, it's just transferring it from one ledger to another, transferring it from one wallet to another. It's not that big of a deal. Moving money from these old hardware wallets into a Trezor. So I just recommend, why not have the best,
Thank you.
Sure. All right. Thanks for my Bitcoin question.
That was a good run. Okay, so we'll go ahead and stop here. I got a couple of quick questions for you. These are just kind of for fun and for giggles, so I'm not going to hold you to them or anything if we don't get it right. It's just really for fun and to see what you think. So hypothetically, when things hit the fan and then everything starts coming down, what will the value be of the national debt?
When does it basically max out? Because they're going to default on it in 2027. I would say it's going to get into definitely in the 40s. Let's say I'll say it gets in the 50s.
Okay.
50, yeah, 5x. Before it finally all melts to the ground.
How high do we get on the 30-year?
So I think it got to 5. I think we're just about there. 5.5, 5.5, I think is about as high as we get on the 30.
Does Trump become Speaker of the House?
No. He doesn't have the patience to work every day.
Is he reelected?
Gee, that's a tough one. I'll just say this. I do think he'll get the nomination. That's as far as I'll go. I do think he'll get the nomination.
All right, fair enough. Politics are always fun. Will Biden run again?
Don, we like the single best Australian gold mining stock, please.
Oh, yeah. I usually don't do singles, but I think I'll give you 3: West Gold, Red 5, and Regis. Those 3. And if Deborah's still on the line, I don't see her. She is on the line. She loves I think Evolution is right there with them on quality, but Evolution doesn't have quite the upside as those 3. But those 4 names I really like.
I have evolution. So you gave me WGX.
Yep.
What are the other two symbols? ASX, please.
Gosh. I forget what Regis is.
Regis. Hold on.
Red
Regis,
five.
REG.
Red 5 is red. I'm pretty sure. And Regis, I think it's RG something. RGC. Or
RGC. Hang on.
I'm not. No, I can tell you real quick what Regis is. I can look it up.
How do you spell Regis? REGIUS.
REGIS.
IS. Got it.
It's RRL.
Got it. I got it. Got it. Thank you. Thank you very much. Thank you.
Sure. All right. And the question was the last question. I forget.
Oh, does Biden run again?
Oh, Biden. Oh, this one's real interesting. I expect Biden not. Well, he's going to run, but he's going to drop out I think he's going to drop out in June, July. So the question is, when does he drop out? I think he drops out in June, July. The reason why he's going to wait is he's going to wait until he can nominate his replacement. And I think Biden will nominate. He'll replace himself, basically. So he'll run to get the nomination, but he doesn't want to be the president. So he will drop out and basically he'll announce who his replacement is going to be. So he might announce a new VP, and then the new VP is going to be, because I don't think it's going to be Harris. But I do think he's going to drop out and nominate someone to replace himself. And whoever replaces himself, I think, might beat Trump. It depends who it's going to be, who it is. But I think they'll be very smart and they'll pick somebody that has a really good chance of beating Trump. It's going to be interesting.
Very interesting. Well, as we saw, hey, Don, are you working on any new books right now?
I am. That's a great question. So I'm re-editing all of my books, and I have 3 more to go. Actually, 2, because I'm just finishing up one. So I'm a very odd person. So my spirit guides actually talk to me. I'm one of those highly evolved souls, and they told me, Don, it's time to write a book, and they gave me the title. They give me the title, and they tell me what the book's going to be about. Give me the plot, and it's called, the title of the book's called Your Soul Explained. And I never like it when they tell me to write a book because it's hard work, and I'm like, gosh darn it, because I know that I can't really say no to them. It's basically my higher self. My higher self is like in charge, right? So I can't. It doesn't take no for an answer. So I know I have to write the book, and then they told me, well, that's not even the bad news, Don, because then I started saying, oh, fine. I'm like, oh, man, I don't want to write another book. And then they said, Don, that's not even the worst of it. The worst of it is you can't even start the book until you re-edit all the other ones first. And the reason why they want me to edit all the other ones is because all of that information is going into this new book, Your Soul Explained. So I'm going to finish editing. I have 2 more to go. I'm going to finish those in October. I'm going to start my final book in November called Your Soul Explained. Then I have more news. And then starting in January, I'm going to be giving away books every month, either 2 or 3 books. I already know 2, but I don't know if I'm going to give Your Soul Explained away. But I'm giving away Finding Your Soul and Team Creator, starting in January. So you can get on a list and get a free book. If you live in the United States, you'll be able to email me your name and address and get a free book. Or if you don't get a free book, you'll get on my mailing, get on the list. So I'm going to be giving away 10 books a month. And then if people give me money, I'll give away more books. So that's all starting in 2024. And the reason why it's starting is because we're only about 1 to 2 years away from the transition that I've been writing about since 1991. So now that we're in it, now that we're starting to go into this transition, it's time for me to basically, and so I'm pivoting away from gold and silver into basically this transition, which in the New Age metaphysical area, they call it the Great Shift. So get ready, buckle up, people. Everything's going to start changing. And I'll finish with this final comment. Everything that you know isn't true.
Well, that's pretty interesting. I did not expect that. That sounds pretty cool. I'll have to follow you on that and look forward to it.
All right.
Another good interview. You had a lot of good stuff to say. And for all those who are really interested and want to know more, tell us one more time about your Substack and your newsletter.
Yeah. So you guys should all know my website, Gold Stock Data, right? So if you own any mining stocks, you should definitely be a member. And then follow me on Substack, Don Durrett. And of course, you guys already know me about me on Twitter. And one last thing. So yeah, let's do this again in January. So let's shoot for, remember, every time we do this, it's, timing's great, right? So let's go for January 15th. How's that sound?
I'm putting it on my calendar.
Awesome. Let's do it again. The closest Friday, the first Friday after January 15th. Because I feel that I really feel that gold is going to be running in the middle to end of January. I think that gold will be running. So I don't know where it will be when it's running, but when I say running, I mean trending upward and off to the races once we get to the second half of January. That's my call. So we'll do it. All right. Thanks again, guys.
Yeah. Thanks, Don. Appreciate it, everyone.
All right. See you later.